Maybe at this slide.
All right. Hello to all you. Good morning. I hope you already had a coffee or have a tea in front of you. We're officially going to kick off the innovation room here for the second ever Digital Euro Conference. Now, please be aware, don't be discouraged. It's not that many people. It's a small circle here today, but there are 100 people online watching us as well. Now, I'm particularly happy that you are here in this room now, because that means you actually looked at the agenda thoroughly and saw that we have the second stage. We will have various topics, a lot of technical topics as well. So very happy to welcome you all here today. For the first presentation, we have a very special person for me. We have John Kiff here as our first presenter. He worked for the Bank of Canada for 25 years, worked at the IMF for 15 years, and has been on the CBDC journey from the beginning. So please welcome John. John, let's have you on stage.
Exactly. All right. Oh, except we tested it. It's not advancing now.
It's not working?
No. It's completely actually. Just turn it off. On. Uh-oh. Okay. Can you help us spell that team? It's like Coinbase yesterday, right? As the max Coinbase went down.
Like, can
Where's
I?
my?
Okay, now it
crypto?
works. Perfect.
Yeah. Okay.
Thank you for that.
All right. So just on the cover page here is a lot of information about me. We're going to have to move pretty quickly through today's session. Usually I like to run a session where I invite questions throughout, but we've got limited time. So I'm going to race through the slides and hopefully we'll have some time at the end to circle back and for questions. But also there's a lot more material on these slides than I'm going to be able to talk about today. I've got some bonus slides at the end on wholesale CBDC because I'm going to talk almost exclusively about retail CBDC. And so I'm hoping that this will be made available. These slides will be made available to everybody. If not, I'm easy to find. I go under the name Kiffmeister, kiffmeister.com, kiffmeister@gmail.com, and Twitter, I'm at Kiffmeister, so I'm really easy to find. Just along the left side there, there's a couple of, three of the recent IMF papers that I've been involved in the CBDC space. And so you're all welcome to visit the IMF website and search Kiff and you'll find me there. So I'm still very much, even though I retired from the IMF 2021, I'm still quite actively involved in different projects with the folks there. And so in terms of growth, I mean, CBDC, retail CBDC in particular, is definitely a very big growth industry. When I started sort of engaging in CBDC work around 2015, there were just a handful of central banks that were looking at retail CBDC. Now we count to about 100 or so, probably more, because the way I track CBDCs based on publicly available information. A lot of central banks are kind of shy. They don't want to talk too openly about their CBDC efforts. In some cases, because they're as we'll see later, CBDCs are very specifically defined, and many people jump to the conclusion that CBDC is a form of cryptocurrency, and they don't want their citizens getting excited about, oh my God, my central bank is going to be issuing a Bitcoin or something like that. So they want to keep a low profile. So this is basically only publicly available. I suspect the numbers more than probably 20 or 30, 40 more banks are looking at CBDC. I think it's like one of those things that's kind of mandatory. I think that any central bank worth its salt is looking at better ways of making money. And so they're looking at CBDC quite seriously. So first of all, when I started my CBDC journey, I would define CBDC as a digital form of central bank cash. And you might still define it that way, but really it's more like a digital, it's more like the digital currencies that we have all around us and have had for a long time. The examples are here, M-Pesa in Kenya, and then we got WeChat Pay and Alipay in China, and in the US. You'd have things like Venmo and PayPal, and even arguably commercial bank money. That's all digital too. We do all our transactions in digital currency. So I've kind of switched my definition to be in very broad terms, it's central bank. It's a central bank issued e-money, essentially. And this is the table that, if you've been following my blogs and papers and so on, this table's been around for a long time. It's been through a lot of evolution. I keep changing it all the time. But one thing that stays kind of constant is that gray zone there, which is the definition of a retail CBDC. So first of all, the key thing is central bank issue. That's what differentiates it from other types of e-money. And so sometimes people pitch me, my central bank is considering, or my country's government is considering issuing digital currency. My first question, if it's going to be a CBDC, is the central bank issuing it? In some cases, it's governments, ministries of finance that are doing the issuance. That's not a central bank digital currency. So it's going to be backed and issued by the central bank. And then also it's got to reference the jurisdiction's unit of account, which differentiates it from, say, in the case of, say, El Salvador, they've made Bitcoin legal currency. Well, that's not a central bank digital currency on so many counts, but right at the start, it's not based on the jurisdiction's unit of account, which is their home currency. But I've got a few examples I'm going to pitch at you in a minute that leads people like the CBDC nerds like me and Atakan, we discuss all the time in the context of the CBDCtracker.org, which is the best place you can go to find out who's doing what in CBDC land. But we have all kinds of interesting discussions about, is this a CBDC or is it not? And one of the discussion points is around unit of account. So, for instance, if the Fed started issuing a digital currency denominated in euro, the euro, for instance, that would not be a central bank digital currency by this definition. It might be a central bank issued stablecoin, maybe, but not a CBDC. So that's the core of it. And I'm not going to delve into all the other definitions, but you can see that all the other ones except for cash don't tick all those boxes. And of course, cash is not digital, so it fails on the D part of CBDC. Another thing I highlight here is that you'll see some people define CBDC as the central bank form of cryptocurrency, essentially, and it runs on distributed ledger technology. But that's not necessarily true. And later I have a slide that shows you that some of the central banks have issued or tested CBDC live. Some of them are DLT, some of them are not. It's not necessarily so. Just as an aside, wholesale CBDC is a bit different. When you talk about wholesale CBDC, we're talking about the DLT-based one, because in fact, wholesale CBDC is nothing new. Every RTGS system is a wholesale CBDC already. So when we talk about novel wholesale CBDC, we're talking about DLT only. And there's also the IMF has pitched this idea of synthetic CBDC, which is essentially a stable coin. I've got it in the second column from the right there. It's basically a stable-coin issued by a private company that's backed by deposits in the central bank. None of arguably WeChat Pay and Alipay are synthetic CBDC because they're obliged to keep their reserve assets at the People's Bank of China. So arguably that is a synthetic CBDC, but the whole term of synthetic CBDC has become kind of a forbidden word now. The BIS has trashed it completely. And CBDC is a CBDC, period. So let's drop this synthetic idea. So we're going to drop it today too. And this is where we get in some of the blurred zones of the CBDC. So the Republic of Palau is a Pacific island, has partnered with Ripple to develop a US dollar-backed digital currency based on the XRP ledger platform. But they don't have a central bank, so they can't be a CBDC. So I've floated the idea of calling it GovCoin. We'll see if that sticks out there. And then and also Ripple's working with Montenegro, and they're in that case, the question comes up. They use the euro. That's their unit of account, so it ticks that box. And so in my mind, even though it's going to look like a stable coin, a central bank issued stable coin, it does tick all the boxes for me on a central bank digital currency. It's issued by a central bank, backed by a central bank. It's also based on the country's unit of account. So that to me makes that clearly a CBDC. This is the one that we're still having lots of discussions about. Atakan and I are based right now undergoing some discussions as to whether the Zimbabwe gold ZIG digital currency is a CBDC. It's backed and pegged to and redeemable into physical gold. It's issued by the Zimbabwe Central Bank. I believe that the government of Zimbabwe has made the ZIG a legal tender. The intent is that this ZIG will be used by citizens of Zimbabwe to buy coffees and groceries and so on. And so to me, even though it may not actually become a unit of account, and that's an arguable definition anyways, but let's say no one actually uses it. The government and the central bank obviously aspire for it to be a unit of account. So, maybe it ticks that box, maybe not. If you're not a believer in it, you'll say, no, that's not, that's really just some kind of tokenized gold token and leave it at that, sort of a stable coin of some sort. But I call it a CBDC because to me, the aspirational aspects of being unit of account ticks that box for me. And right now, I don't think it shows up on cbdctracker.org that way. So again, the nerds among us have lots of great discussions around such topics. Another controversial one is that we've got a number of these central bank operated retail payment platforms. In Brazil, you've got the Pix instant payment platform run by the central bank. It's based on traditional centralized ledger. And funny enough, no one calls that a CBDC. Now, the National Bank of Cambodia's got this platform called Bakong, which is essentially the same thing as Pix, from what I know. I mean, sometimes the information you get on these platforms is a bit sketchy, but to me, it looks very similar to Pix. It's a payment system that's run by the central bank, but it's really just a payment system that links together banks. So it's interbank payment system. But the vendor, Soromitsu, pounds the table and says this is a CBDC. And I think they're saying that because it's based on DLT, and that's their personal definition of what a CBDC is. I have not seen the evidence from the Central Bank of Cambodia that is in any way a CBDC, because it's still commercial bank money. It's just being exchanged on a central bank run platform. And the problem I have with that is, if you want to really know whether something's a CBDC, you would normally go to the bank's financial statements. So Bahamas, for instance, has launched the Sand Dollar. Well, it's easy for me to check that out because I can go to their financial statements, and right below cash in circulation, there's a line that says Sand Dollars. And for some reason, I don't know, it's just I don't know where to look. I cannot find the financial statements of the Central Bank of Cambodia. And of course, it's not in my language, but I mean, I'm pretty good at identifying what a financial statement looks like with columns and so on. And I've gone through their website and have not found that anywhere. So I can't prove or disprove that, but it certainly doesn't look like a CBDC to me. So again, these are the CBDC nerd discussions that we have. I don't call the Bakongo CBDC. World Economic Forum calls it I think they call it a quasi or pseudo CBDC. And I think that's kind of where the ball got rolling in the wrong direction, but not a CBDC. Okay, so who's doing what? This is a map from the cbdctracker.org, and it shows you the status of retail CBDC around the world. And then you can see it's got some color coding there. So you've got the blue ones, which you can hardly see them in there, but those are the ones that have been launched. And there's, I think, 4 of them. And then you've got pilots, which are the brown ones. And difference between actually in the launch and a pilot is a pilot's usually it looks like a launch, but it's on either a limited time basis or limited scope basis. So in the case of Uruguay, they did a 6-month pilot, and at the end of it, everyone had to redeem their CBDC, and they closed down the project for evaluation. And China's running one where they run different types of configurations in different places, kicking the tires on different types of CBDCs, different use cases. And then you got proof of concept. And this is where things get fuzzy, because you'll often get a central bank, announce with great fanfare that we're doing piloting now. Now, proof of concept, difference in a proof of concept and the pilot is the proof of concept is more like a lab experiment. In one extreme, it's simply just the central bank testing out different technology platforms. Sometimes, though, it's it's where they actually do what looks like a pilot, but it's often with their own staff. For instance, in the case of Ukraine, I think they called it a pilot, but it was actually run with the employees of the central bank, and I think they were able to use it in the cafeteria and a couple of select vendors outside the central bank. But that to me is a proof of concept because it's done in a very, very safe way. You're not exposing the central bank to the general public and the potential for embarrassing glitches and that sort of thing. And then you've got a lot of central banks that are in the research phase, and there's some blurry lines for me between research and proof of concept, because I would bet that a lot of the countries that are doing research are also testing out different platforms. They've engaged with one of the vendors like a Ripple or a GND, for instance, and they've tested out the technology, inside the central bank amongst the IT people. So there's probably a blurred line between research and proof of concept. For me, there's a very bright line between pilot and proof of concept. And so like Turkey, for instance, just released a white paper on their progress on CBDC, and they were talking throughout the thing, they were talking about pilot, and yet they never said anywhere what that pilot included, like what was the nature of the pilot, who was being invited to partake in that pilot. So for me, that would remain a proof of concept until I get some kind of proof, and we've got various detectives out there, forensic detectives, looking for any evidence of what this pilot is all about. And I think we have a session in this room later today and maybe this is our chance to find out where we're going to bucket Turkey. And just so it's really clear, so these are the countries that have fully launched retail CBDC. See Nigeria, and there you've got to really squint to see it. And there's some Caribbean islands in there that have fully launched. And then you get into an interesting counting convention here, because the CBDC tracker.org kind of competes in the CBDC tracking space with the Atlantic Council, and they count 130 central banks who are researching CBDC, retail CBDC. We count 100. And the reason is that the main reason is the Atlantic Council counts by country. And we count by the jurisdiction, the central bank in that jurisdiction that can issue CBDC. So in the Eurozone, for instance, Banque de France cannot issue a CBDC, specifically a retail CBDC. Only the ECB can. The Atlantic Council counts every central bank in the Eurozone that's involved in the experiments, because the Banque de France is definitely involved in some of the experiments supporting the work of the ECB, but ultimately the ECB is the only central bank in the Eurozone that can issue central bank digital currency. So when the Atlantic Council accounts launches, there's one of those little dots is the Eastern Caribbean Central Bank, which plays the same role as the ECB in its currency zone in the Eastern Caribbean currency union. There's 9 countries in that union. So I count 1, Atlantic Council counts 9. So when you see these big differences between our tracker and theirs, most of it's really just this. We've decided to count central banks in different ways. And we've got 2 that have canceled. We've got Ecuador. They had the Dinero Electronico, and that was active between 2014 and 18. And then, and this is to me my proof that a CBDC doesn't have to be based on DLT, because this is Finland, and they had the Avant system, and it started in 92 and then ran for 13 years, and then they shut it down. And of course, 1992, Satoshi hadn't written his white paper at that point, so there was no DLT. So that's, to me, kind of shows that you don't have to be DLT to be a CBDC. We'll talk a bit later about the whys. People often ask, like, why did they cancel, and why did some central banks shut down their retail CBDC work? But we'll get to that a little later. And this is my personal tabulation. It's really hard to see. When I started tracking back in 2015 or so, this same table had maybe that handful of central banks. Now it's got the 100 or more central banks. And if you go to my web page, it's the links below. You can click on any of those links, and it'll take you to the kind of smoking gun evidence of that particular central bank's research work, and it buckets it the same way I mentioned before, by launch, pilots and proof of concepts and so on. And I've got this other advanced versus not so advanced research and development. Maybe I might eliminate that at some point for this. It's kind of a judgment call. Who knows how advanced any of these central banks in that big cluster there are advanced. But I do suspect that in those 5 central banks that are in the advanced phase, those are probably doing proof of concepts. I can't prove it, but they probably are. And I shouldn't say I can't prove it. I sometimes have private information that I don't, if it's given to me privately, I'm not going to share it. So if some central bank told me, hey, we're actually doing proof of concept work, but we just telling you about this, I will not use it here. So I think I've covered all the different factoids that drop out of this. But like I say, you can follow, if you go to that link at the bottom, it's always got the most recent version of this table. And then in terms of why are central banks looking at CBDC? So I've broken some of them down into the ones that are relevant for advanced economies, and then others for emerging market countries. I know here we are at the DEA, and it's we're focused on advanced economies, but a lot of my personal work that I still do with the IMF and so on is actually most of it's with the emerging market and developing economies. And so in terms of advanced economies, a common theme would be is I say ensuring access to universal low-cost digital payments in the face of declining cash usage. And that's be like Sweden. Sweden would be like the poster child for that particular case, where like 80 or 90% of all payments are being done in not in central bank money, but a private payment platform. Almost nobody's using cash, nobody's accepting cash, and so that kind of has it can undermine the central bank's ability to conduct monetary policy, for instance. And there's other reasons why they may want to reduce monopoly effects in the money system. So that's a very, very common one. And then when you're talking to the EMDE countries, they always talk about they're using it as a way to improve financial inclusion and financial digitalization. Many of them are focused on reducing the cost of managing physical cash. And I think there's economies of scale in producing high quality physical money. And so for small central banks, that can be an awfully expensive operation. And then risks, I've heard that in both Brazil and also the Eastern Caribbean, there's that theft risk. And in the case of the Eastern Caribbean, it's literally Pirates of the Caribbean. There is a risk for cash for them because they transport the cash between islands using boats. So they would like to eliminate cash altogether, although you'll never hear a central bank say, we're going to stop producing physical cash, because that will probably cause riots in the street. I think everyone wants to know, no matter how little cash they use, they want to know that there's a backstop. And in a way, it's the ultimate backstop. If power goes out or connectivity goes down, your digital currency may not be of much use unless you have an offline version of it. And so physical cash is always your best backup. And the other one is as the use of central bank money goes down, the income that central banks earn from those bills they issue and some banknotes is they call seniors revenue. It's kind of a free lunch for the central bank. So many of them want to get claw back their seniors revenue. Others aspire that it's going to reduce the currency substitution. If you create a digital version of your central bank money, everyone's going to want to use that instead of whatever else they might be using, whether it be dollars or euro or Bitcoin or whatever. I'm a bit skeptical about that. Just changing the form from physical to digital. Usually, when people are using some other currency, there's other more fundamental reasons that the digital currency won't improve. And then some just hope to, for instance, leapfrog in terms of the efficiency of their and safety and resiliency of their payment systems. Because especially in EMD countries, they might be running systems that are very antiquated and maybe very inefficient. So they're thinking, instead of just doing the same old, we're going to replace it with a whole new system, possibly based on DLT technology. Others are hoping that they can improve monetary policy effectiveness, and one of the ones that was floated for a while was the idea of a CBDC that pays interest and would pay negative interest when you're in the negative interest zone, which we were not that long ago, and so that would be the catch with that is if you're going to use the central bank digital currency with a negative interest rate to be able to strengthen the negative interest rate effect, you've got to somehow eliminate or make the use of cash really hard or expensive. And so to me, I think that's kind of a non-starter in terms of motivation. Some are hoping to fight tax evasion and illicit use of money. That runs us into some interesting privacy-related questions that we may have time to discuss later. So it's one of those things that sounds like a great idea in theory, but will people want to use a form of currency that has that degree of surveillance built into it? Others aspire to use CBDC as a way of distributing government payments directly to citizens. That idea popped up during the pandemic when the US government, for instance, was considering actually launching an emergency CBDC in order to distribute stimulus payments to citizens. So because many didn't have bank accounts, so when they wanted to send stimulus payments out, and the question was, how do you do that when we don't have a bank account to send it into? And so you send it by the good old snail mail, and that's just not very efficient. Then cross-border payments is another aspirational aspect of retail CBDC. I put in blue because I think it's a really aspirational thing. The idea of building out a retail CBDC that's going to be interoperable with other countries' CBDCs is a bigger topic, more complex than what you want to tackle, I think, with the retail CBDC. The wholesale CBDC arena is where that's being explored, and I think that's where you want to start before going to retail cross-border payment CBDC. But that's me, and some central banks. I mean, I think Nigeria will say that they have a sort of a cross-border aspect of their CBDC, but it doesn't. I don't think anyone's using it, and I don't think it's really truly the case where a Nigerian citizen can send an e-naira, as they call their CBDC, directly to someone in some other country where they can, transform into their country's CBDC. Maybe when you've got a more vibrant ecosystem of CBDCs, that will be possible, but we're not there yet. And in terms of common themes, first of all, none of the central banks run their digital payment platforms by themselves. That's not a thing that CBDCs or central banks are good at. They don't have bricks and mortar and so on. So they basically partner with private sector to run the CBDC platforms. Transaction fees and remuneration. None of the ones launched so far have transaction fees or pay interest. And I don't think anyone's really seriously thinking about that right now. I think maybe the ECB may be contemplating remuneration in order to mitigate the risk that you compete too effectively with the commercial banking system and suck deposits out of the banks into CBDC. To mitigate that, what we call disintermediation and run risk, limits are being applied on how much you can hold of CBDC, and then to conform to the illicit finance FATF standards. Most are based on, they have tiered limits. Not only there's one hard limit, there's different levels of limit based on the amount of KYC information is taken from citizens. And then there's the dimension of privacy and anonymity, and that's kind of wrapped up in the discussion you're having about how to conform to the FATF standards. And there's a lot of discussion around privacy and CBDC, and we'll be hearing more about that in the digital euro discussions. And technology platforms, a big decision, could be centralized or DLT, and whether to offer offline access, which is a rather controversial topic because controlling for double spending risk in an offline system can be challenging. And this is just a quick list of the projects that have launched or been piloted. And you can see in the rightmost column, there's your evidence that some are DLT, some are not. And then again, I'm not too sure how the G&T platform works, but I suspect that's a centralized platform too. Like I say, these slides, you can get them one way or the other from me if you want to dive into them. And these are just the details of how these different limits and so on have been affected in different pilots and launches. I don't want to spend time because I'm running out of time. And then also there's different ways of controlling for that privacy versus AML compliance out there, other than the very crude limits and so on. And I've got links to some of the different possibilities that are being explored out there. And then we get to programmability. and it's wrapped up in the whole privacy discussion, in particular.
On my street, well, my street corner in London, and that thing, that yellow sign.
Yeah.
Is up there being waved around.
That's right. Yeah, I think I've seen, well, CBDC itself has been touted as being the most extreme threat to liberty, and like I was at an announcement by Tom Emmer, who's sponsoring a bill in the US, and he virtually like wrapped himself in the American flag and said, you know, it's un-American and we're not going to have a CBDC. But you talk about programmability, and then we've got that headline from the IMF, our deputy managing director at the time, talking about how wonderful programmable CBDC can be because you can control how people spend money and so on, and that's wonderful stuff. I mean, that's like poking a bear with a stick, you know. That was the most tone-deaf thing I've ever heard anybody say. But the programmability, and you've seen that the ECB, for instance, said the digital euro will not be programmable, but you know, we can get into more nuanced discussions where you talk about programmable money versus programmable payments, and if you're running one of these intermediated CBDC systems where you're delegating the hard work to the banks and so on. You could imagine a CBDC that's not programmable as it comes out of the central bank, but the payment service providers, banks, and so on can implement it with, you know, citizens' approval and so on. It wouldn't be baked in. And then just a final thought, I call the kind of CBDCs we're mostly talking about today what we call Death Star CBDCs, and they're big, they're mega big, and they want to be the kind of currency that everybody uses every day. And what I didn't say in those tabulations is that all those launches and pilots have led to pretty flat demand, pretty much very, very overwhelming, and the central banks are tearing their hair out. How do we make these things work? I think some of the problems we have there are that in some cases, the central bank just rushes these things out the door without really proper preparation and so on. And there's an IMF model called the 5P model that has a very staged approach. And so some of them skip too quickly from that. The other is that what I call the knife edge between being too attractive and not too attractive. Because if you're too attractive, you're going to disintermediate banks. So some of the central banks have told me we're so frustrated that we want to design a kick-ass CBDC, but if we do that, we're gonna disintermediate. So what are we going to do? So they're kind of like deer frozen in the headlights. So an alternative is what we're seeing around the world. It's called the test and deploy model. It's basically very targeted, limited use case CBDCs that are, you know, really laser focused on meeting specific demands of users. And we're going to hear in this room from the Central Bank of Hungary talking about their platform, which is not a mega Death Star CBDC, but it's actually being used by people. It's a successful pilot. And then Australia, Kazakhstan, and HQMA are all exploring these special targeted use cases, which I think is a good way to go. I mean, start there, and then you test it out. Yeah. Yeah, I'm going to wrap up right there. So there's the contact information you want to hear more, and there's the slides that follow this on wholesale CBDC.
Thank you. That was probably the most comprehensive introduction into CBDCs I've ever heard. So thank you, John. Just two quick things before we start with you, Lawrence. I forgot to mention, but obviously, thank you all for participating. Thank you to all the participants, to the DEA members, especially for organizing this, to all these sponsors. This event wouldn't have happened without these sponsors. I would love to have questions for the next sessions. Next time we'll try to be a bit more strict with the time management. And for all the people joining in and going out the rooms, this is fine. Don't be worried that you're going to disturb us or anything. The agenda is designed in a way that you should go and float around, yeah? William, I want to keep it short. A lot of CBDC stuff we already talked about. You're from the Digital Pound Foundation, and he's going to tell us the big question. What's the killer app for CBDC? Thank you.
I just need some help getting these slides switched around. Sorry, please.
You can. Just click on if you just click here.
Oh, I see. We're in the whole grade.
And
right.
Then so we had a few more slides.
Right. How do we get full screen again? That one, I assume.
Full screen already.
We are not full screen. Just let me.
You can start.
Right. Sorry. Hello, everyone. So yeah, I'm William from the Digital Pound Foundation. who really are, think of us like a sister organisation to the Digital Euro Association, equivalent, trade association, bringing members together, fostering discussions, talking to mainly a UK set of stakeholders like particularly the Bank of England. And we have a number of working groups, privacy, identity, policy, etc. I'm the lead for the use-based working group, which is the kind of real practical one, trying to find, and it is still trying to find a use for this. Well, either we're agnostic, by the way, digital pound could be the UK central bank CBDC, could be a private stable coin or anything in between that really gets traction. Kind of agnostic to that, although the language does hop around a bit. So this is not, CBDC pure breed, although you'll see perhaps that is the way that it'll actually be of use to people. So whilst we're UK focused, I think some of the logic of what could you really use this for and why is it advantageous over existing digital payment methods. Don't forget the UK really very mature in that regard, has had instant account payments since 2008. Very well developed card economy, card acceptance economy, etc. So it's a particularly hard problem, I think, in the UK, but the learnings do map over to Europe as well. So this use-based working group I run is a group of the members and people involved in the DPF. This is our kind of exam question. Can we find a use case of value to the citizen on the street? So it's retail, it's trying to be individual focused and what would bring, in fact, I can see we've got one Anthony from Ripple. There's another Anthony from Ripple who is often in our meetings and the joke's been that matters to Anthony's granny. This keeps coming up. That's the test, practical, not for experts like us, for, any generation, any level of understanding. And as I've said, there's a bunch of people active in this. Some are in this room today. Others are members of the DEA as well. We've also got some academic research stuff going, I think, as we speak in Manchester University. So I'll walk you through this and talk you through what we've been doing. It's all the so what question. Last year's really been about the thinking. We're trying to get into the actual, really deploying this year into building pilots and through the concepts, which again, I'll explain. So the thinking last year, I know you probably can't see this, but it kind of doesn't matter. I'll talk you through it. Huge grey whiteboard brainstorm of every single possibility of why it might be useful. Again, it's a digital pound, could be digital euro, CBDC or stablecoin, kind of don't care. We've got categories here. The first one we knocked off was cross-border, really because that's kind of not domestic, and there was this exam question, what matters to Anthony's UK-based granny. Cross-border is kind of off there and running, it worked, for cross-border remittance, all of those stories, use a stablecoin for the international leg, save speed and money on Swift, etc., etc. We then knocked off this whole trade and machine to machine and etc. category again, trying to stay retail consumer focused. And so we basically got into more detail and tried to go from this huge great brainstorm to work through a number of themes which we would really develop in detail. And I'll talk you through these and what these mean to us. So this was our initial thinking, and I will try and make sure we get time for, pretty sure there will be time for a bit of a chat. Questions, so pick them up. There were four themes that we kind of ran with, varying leads of development. One bit was driven by somebody from HMRC, which is a UK tax man, the tax authority who was in the room. All the thesis of making tax deferrals, and it's a two-way story. It's not just how to get it off you more seamlessly, but how to pay it back. And this is examples like multiple income gig economy workers who, at the moment, if you've got incomes from different sources, it's a nightmare to get taxed correctly. You'll get overtaxed, undertaxed. If you have a benefit from a while that would change and interact, it all goes wrong. And I think the UK has probably 1 in every 3 taxpayer has a kind of correction notice or an overpayment, underpayment at the end of the year. So there's things around that. We're getting that income tax, national insurance more accurate. Won't drill down for the sake of time more detail. The other one, it's a bit of a unclear category, but this was about more accurate billing for services I buy in my home. It could be utilities, so more fine-grained, day-to-day billing, so that you're not overpaying, underpaying, or if you're lower income on a kind of prepaid meter, getting into emergency debt problems, etc. Also, another angle we've played with but have yet to develop in detail is that fairly obvious micropayment for content piece, where there's something in it about the digital pound construct, the lower cost of operation that can enable various activities like that. Next one that we did really get into quite some detail, control your money. Again, a generalist theme. This manifested itself through high value purchases, basically. So we majored on a car. Either you're newly buying a car or you're in the second-hand, resale market. And if you think about it, there's all kinds of complex interactions with that core, literally handing the car over. The purchase itself, financing, what happens if you hand off financing and get another deal as you're trading in for something else, or everything, maintenance, MOT, insurance, etc. And that could apply equally well to, high value electronic goods and things like that. There's an awful lot of transactions, admittedly, around the actual payment. So the question here starts to become how much of the value is in the payment itself versus all the related transaction activity, if you like, the contracts and the exchange of value and data around it, rather than literally exchange of sterling or euro or whatever. I'll come back to that because that's a real key point that the learnings here can suggest most bits, the actual transactions value, utility to the end citizen. And then the fourth one that is in the early stages of getting drummed up to a pilot was this whole supporting sustainability. And this is, the whole product life cycle tracking, incentivization of rewards. There's it comes and goes in different bits of the UK, but the deposit return scheme, other countries have had it for a long while, I know, but 5 pence for handing back your bottle or your can, and how do you operate that on a kind of national level and make the payment economics and the incentivization of people to do it better. So that's one level of this. The other point is, as you work through this, you find there are a number of kind of building blocks, which kind of technically we call primitives, that you've got to have that come up time and again. So this is now moving towards how you build a pilot. And these are things like three-party locks. If you think about it, there is the person who's employed, the person who's employed the employer, and there's a tax man, and you've got interactions and bits that need to be locked and data that needs to be exchanged. That's one example, conditional releases and so on. And a couple of our members are, technology providers who've played around in projects like the Bank of International Settlements, Rosalind, with these building blocks. So they're starting to kind of manifest and actually get built. So this now goes towards how we build something. Just a moment of advertising. We have a couple of thinking papers on our website, the Digital Pound Foundation, for a couple of these where we got into a whole, white paper, and they drill down into detail on which is it, control your money and supporting sustainability. So there's another level of detail if you want to take a look. But as we're doing all of this, we continually come back to these questions. Why can't we use what we've got today, right? Again, don't forget, UK, along with mainly, I reckon, Northern European countries, but the most mature, electronic payments, electronic banking markets out there in our geography, at least. Why can't we do it with what we got? Keep coming back to, well, hang on, we've got low cost instant account-to-account payments. If you tie into those, and there are ways of doing that from the data layer, why can't we just use that? And so what is this digital pound really adding to it? And the answers to that are, and this is why we haven't really nailed deeply, we're still looking for the killer application, and we'll definitely have time for a bit of a chat and discussion on this. We haven't really nailed it, but it's really, to summarize it, 10% of the value is in the actual payment activity itself. 90% is in well, the programmability, the smart contract, whatever phrases you want to use around it. And that we haven't got beyond that. So it's always how do you tie that trigger of the payment into all the rest of it. Which then means you're only really going to get this going as a use case of any volume or traction when all of that connects together, and that's complicated. You know, how to build a pilot that demonstrates the value in that kind of second-hand car purchasing thing. It's obviously complicated bit to prove out and test. So we're working on that, but that's kind of this year's exam question. And then you go beyond. The obvious question is, why would anybody actually want to use it, right? So the hypothesis we've got is this will probably be public sector driven, you know, UK government, European government, etc. You know, what's the point of yet another mechanism that is effectively an e-com checkout or a point of sale mechanism? What the hell doesn't add any value? We know the European Union hate Visa and MasterCard and want a different alternate, but really, you know, so what? And equivalent in the UK, by the way, same story really. But so there's this kind of incentivization link. And there's some research going on by Andrew Buckley, who's a really senior ex-MasterCard kind of product guy, now doing this research, I think this week, next week at the Manchester Union, which is all about what might be the drivers. It's going to Gen Z students, which would be the early adopters of this thing. But what do you think? Do you understand it? What might incentivize you? And this is things like, so this public drive might be, this example, it's a bit small, but it's basically discounts on government services if you use the mechanism. This example happens to be, you know, a slice off your annual road tax for your car. That's the hypothesis that we're working on, is some kind of public sector push will drive this. You know, his experience on new payment rails around the world, there was one in Thailand he did, which only really got going because COVID, you know, helicopter money was handed out using that mechanism. So not convinced the private sector will really drive adoption of these things. So where are we? We are doing this research, as I said, that will go public, you know, all plastered all over our website, probably early April, something like that. It's just kicking off now. We're getting into that build the pilot phases, which are around that sustainability one. And we've actually got a left field one because we're struggling so much to find that, you know, Anthony's granny retail value. We've gone back to a cross-border trade. So it happens that the UK is well ahead on electronic trade digitization, tying in the use of a digital pound to that. So we've done a slight sidestep because we're struggling to find this. And yeah, in summary, we're still looking for it. We haven't nailed it, and we've got about 5 minutes. So it'd be great for questions and thoughts from the room. Just before that, you know, advert for the Digital Pound Foundation itself. It's a member association. Come talk to me either directly afterwards, but you know, people join. We've had 3 or 4 new, I think, this year so far. Think of it like the DEA. Don't know what's happened there. And yeah, that's where you can find me on LinkedIn. So thank you. And any questions or thoughts, indeed, not just questions on this? Yeah, anybody got any ideas for use cases that might actually prove valuable? Yeah, I'd love to know.
William, short notice. When someone asks a question, please repeat the question so the audience can.
Okay, sure. Sorry. Moment of thought. Yeah, sorry. Let me see if I can go backwards to what you're referring to. So the question was, which of these 4 themes are we finding most traction? I can answer it slightly differently. There is which one has the most potential value. It's probably the making tax effortless one, because that's, you know, really fundamental to everybody's income. It's got the slight ear of, you know, the innovation team in HMRC and so on, but it's also the biggest, slowest bill because you've got to move a government body and their, you know, selected integration partner, which is essential, you know, at the speed of a snail. So that's probably the biggest win. I like the sustainability one. We're always trying to get a bit of a kind of social impact angle on this. And I think that one probably will get driven by a smaller member of ours. It's called One Step Financial. And yeah, that hopefully will manifest itself as a real kind of real end user pilot imminently, faster than any of the others. I like the others, but it's just the complexity of it. You know, like that car, you've got so many different, you know, financiers, obviously the dealers, maintainers, blah, 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 blah. That would be hard to actually build that one. But we're looking for support from certain people in this room, like Ripple over there, which we'll talk about later. Yeah, sorry, yes.
Are you like involved and trying to, convincing your key stakeholders to work with you in this use case? Because for me, like the one is public event, so it should be the public in charge of investing for some benefits. Point two is for the user. Point three is for maybe the bank or the intermediary providing some capacity to the users are willing to pay for this money. So you have different target of stakeholders to be convinced to support you in like finding the use case of this in theory. I mean, everything is interesting, it's true. But then it's someone to do back to the company.
I think that's a good question. So to repeat the question, it was basically, correct me if I get this slightly wrong. How do you get support from the stakeholders, which are all different by use case area, to get to actually go the next step to build a pilot? Is that what you meant?
Yeah, ultimately, yes. But then they have to be convinced to then support you. So what are the levers?
Okay, how do you convince them to support you? Well, I think we're still at the stage where it's fairly research based. Proving that there's an ROI on your effort is tricky. So in a way, it's kind of self-selecting. You've got different commercial organizations at different levels of maturity trying to prove different things. And then, they're giving their time free of charge to this trade association, the DPF. So that somewhat self-selects what you develop in more detail. But yeah, we're going to try and get kind of standalone funding to actually really give it a kickstart. You know, there are the usual governmental grants and bits and bobs, and then there are likely the Bank of England actually might take a while, but we'll be doing another wave of proof of concept, RFP to run a proof of concept, that kind of thing. So you need to actually find the money to drive it, but it is. I don't have a good answer. This is the fundamental point. Maybe, yeah. Let's go here if you don't mind, and then we'll probably have to stop.
Question one, killer use case usually would be it's a lot of things about the offline.
Yeah.
You didn't do that much, but don't you think to be a killer use case, or you're looking for another killer use case, or what's your view?
Yeah, it's true. A lot of people sorry, the question was basically, what about offline? Yeah. No, it's a great question. The obvious cash replacement argument, but then, to be honest, again, you're absolutely right. We've slightly self-selected based on the interest of the people actually running the activity. There is a different working group it's all around the technologies and the identification for offline. So fair point, but it kind of just doesn't sit with me. And let's do this one quickly.
Yeah, very sure. Yeah, we just spoke about the tax payments.
Yeah.
I guess you talk about the new rates that is coming into the account, I guess.
Yes.
Sure,
you're talking about the open banking.
Yes, I use this one just to compare and see because for tax payment, I think it's very, very much more.
Yeah, no, you're right. So super quick. The question was, what about open banking, which is full payment? It is most mature in the UK. It is used by HMRC for when you've actually got a given, when you know what your tax calculation is, but it's still not solving the problem of, you get an end of year bill. How that solves the problem of you get an end of year bill. How do you pay it? It's not, well, what's happening in the meantime, and is that bill actually accurate? Which then you can go more fine grained. Yeah, you're right. They've used it, and it's been one of the real success use cases for the taxman. Yeah. Okay, let's stop. Thank you very much, everyone.
Thank you, William. One for starting, we will do that. That's fine. Good. Thank you. One for starting a discussion. I think the presentations are so much better when we start discussing and asking questions, and also for trying to answer the $1 million question. What's the use case, right? All right. Our next presenter is going to be Leon Schumacher, and he's a very interesting topic because he's going to present us a CBDC solution that might solve the privacy problem a lot of central banks are proposing. So please clap it up for Leon.
Thank you. Good morning, and thank you for the opportunity to present here at the Digital Euro Conference. My name is Leon Schumacher. I do some advisory on the Digital Echo, and I'm also the chairman of Thaler, which is a technology, an open source technology that can be used for CBDCs or for commercial payments. But we are here at the Digital Euro Conference, so let's start. Oh, that's not mine. Let's start talking about the digital euro. So I think the first thing that strikes me when I see the marketing and propaganda that the ECB puts out is the fact that they don't hire a fact checker before they do that. Because they develop an online system where privacy is zero, and then they claim they have the highest possible protection of privacy available. Clearly, that doesn't go together. And then they plan an offline solution that mathematically cannot be secure. And they say, well, we have the greatest security of all. So I think there's a need for some fact checking. And I will leave it at that because we could speak the whole session about the digital euro. I have a book, Decoding the Digital Euro, where I jump into that, and there will be a copy available to everybody online and offline who wants one. I'll come back to that at the end. But let's move on to the subject of Thaler. So as I said, Thaler is an open source solution that can do CBDCs and other payment, commercial payments. Some of you might have heard of the BIS project Tourbillon, which introduced privacy-preserving payments with a similar technology. So Thaler is the most advanced iteration of that technology and will basically go live with commercial operations this year. So we'll come back on that. And it is a token-based system. So it's not account-based, it's not DLT-based. It can run on a DLT, but it's an actual token that you have in your wallet. So the newspapers have picked up on Thaler as well, and compared to the digital euro, I will not going to do that. I leave that to you. You can take the book and then compare item by item and then come to your own conclusions. The newspaper have picked that up because Thaler is actually financed by the EU and by Switzerland and is coming to market this year. So what do we address? What are challenges in the payments market today? I think the first point that we have is that whatever you do, accounts are needed. You need an account. You want to do banking, you need an account. You want a credit card, you need an account. You want a digital euro, you need a digital euro account. It all works with accounts. And that makes things complicated because you need to register, you need to log in, you need to do multi-factor authentication and so forth. The second thing is, in all the current system, fraud is high and going higher. The expectations are that fraud will double. We are 30 billion now, and it's supposed to double in the next 5 years. This again brings a lot of friction and complexity due to that higher. Due to that higher fraud, more and more steps are introduced to fight the fraud. So soon we'll have 7-factor authentication and similar things that many people will not be able to use. And last but not least, we have data collection and mass surveillance, which is always part of today's solutions and for which account-based systems are perfect. So Thaler in a nutshell is token-based cash. It is actual cash. So the money is on your phone or in your digital wallet, the same as your cash is in your briefcase. There is no account, there is no ledger entry whatsoever. It all runs out of the wallets. That means you don't need to, as I said, register, log in, multi-factor authentication, and so forth, because the money is not tied to an identity. And so there's no risk of ID theft, none of that. The only thing that can happen is somebody steals your wallet. And then he can access your phone and you don't have a backup. That's the only risk you have. ID theft is not an issue. Because of that, you get a frictionless one-click experience. You can just say, okay, I want to pay, click, you paid. You don't need to scan your footprint and other things to basically do that. And it works both for fiat and cryptocurrencies. It offers guaranteed anonymity. So that's one of the big items in CBDCs. You can guarantee the anonymity of the spender. Now that scares every banker too, and every regulator. Anonymity, ooh, those are the criminals. Now, you can spend anonymously, but you cannot receive anonymously. Meaning that the good things of privacy are maintained and the bad things of privacy are removed. So you cannot do tax evasion, you cannot do money laundering, you cannot do illegal stuff. And that brings together the best of both worlds. And I think that's one of the big advantages of a solution like Tower. Now, why would a consumer find a solution like that good? Of course, if they have Apple Pay, they have already a good usable solution. But like that, it is convenient. You can basically pay with one click in any currency. The one thing where nobody can compete is privacy preserving. So it does not share any information unless you agree to share that information. It's friction-free. So as I said, no login, no multi-factor authentication, none of that. And no account required. No bank account, no digital euro account, no account required. Why would a merchant want this? One, you get instant clearance. You get your money immediately with the one click. So you get Amazon one-click checkout without having to sign up with Amazon. It's easy and compliant because it doesn't collect any personal data. You don't have any headaches with PCI DSS compliance or GDPR compliance or any of that. And it's extremely fast and efficient. So the operating cost of the system is minimal. We have proven 30,000 transactions per second. 2 years ago, I think we could show around 100,000 now. So we can do transactions of 0.1 cent or 1 cent in a still economically viable fashion. And this gives you an idea of how the architecture looks in case of a commercial operation. And so this one. So that the customer basically makes a wire transfer from his bank to the bank of the Tower exchange, who then issues the tokens. Here it functions like an ATM machine. So once you get the tokens, the association with your bank account gets lost, and the tokens are as anonymous in the wallet like your banknotes or your coins. And then you can spend them here with a merchant or in peer-to-peer transactions. And at the exchange, you can configure fees. You can say, okay, if you put money in, you pay something, or if you do a transaction, you pay something, or if you take money out, you pay something. That's all configurable as you like. And of course, the same model works for a central bank. In case of a central bank, you would not need an escrow account because the central bank doesn't need to keep the money in escrow. But that's basically the architecture of the system. When it comes to form factors, we cover the normal form factors. I think a couple of things I just want to point out here. We have standardized with the IETF a payment link under RFC 8905 that allows you to basically pay with a link, and you can also basically put that link into emails and messages and so forth and pay instantly with that. And for the merchants, we have a possibility to have the merchants offline and still be secure. We have developed some technology to make sure that the merchant knows he got paid and paid the right amount. And we have patented that to allow offline merchant operations at very low cost. And the last difference is we have also browser plugins, because when I have my phone, it's not easy to do e-commerce. When I have a QR code on my display, it's hard to scan it with my camera. So if I have my computer and I do e-commerce there, I have the wallet in the browser, I can basically work from there. So those are kind of the main additions to what you usually see. So if we come back to use cases, as was mentioned before, and microtransactions. When we talk microtransactions, of course, IoT, machine to machine are the big cases, but one that is so obvious to me is basically content. I use Twitter a lot. You click on an article, it takes you to a registration page or a paywall. 100% of the time, I'm gone, and everybody else as well. So if I had the option to basically say, I click the article, it takes me to a page, it says, read the article for 10 cents with one click, I would read all of them because I wanted to read the article. It was frictionless, one click, and it costs 10 cents. I would buy them all. So that's a very simple application of this microtransactions, and this is a big microtransaction, 10 cents. As I said, we can do 0.1 cent still in an economically viable fashion. So, as I mentioned before, you can also have a cost-efficient solution for brick and mortar merchants. So I go into the bakery. He can just display his QR code. I scan it with my phone. €1.50. I get the baguette and I leave. But we can even secure that with a patented tool that ensures the baker that he got the payment or that he even got the payment and the right amount without him being online with everything anywhere. So just wanted to mention that. And the system allows to basically do instant or deferred payment over any communication channel that your device offers. This is a screenshot of the iOS wallet, and let's just run through it quickly. So I said, okay, here we have, this is the balance. We have here a currency called Kudos. The wallet can do multi-currencies, but we just created one called Kudos. And I want to send some money. So let's go through that. So I need to fill in how much money I want to send, 50, why, on my part of the taxi ride. I can put in an expiry. So I said, okay, here I put in 3 minutes as an expiry. And then I say, okay, I'm going to send the 50 Kudos. Puts me to the next screen. If the person is next to me, can scan the QR code and the deal is done. Let's say the person is now 1,000 kilometers away from me, so I cannot put the QR code in front of him. So I just say, okay, click share. It brings up the share options of my iPhone. So I could take Messenger or mail or whatever I have there. We'll take the mail option in this case. It populates an email. I just need to put in the email address and I click send. And you can see here the amount was the balance decreased by the 50. I have here a pending transaction because the other person just received the mail, so he hasn't clicked on it. I have a pending transaction here. Then the other person clicks on his link, and you can see the balance stays the same. The pending transaction disappears, and you can see the entry here as a permanent transaction for the money. If he doesn't click on the link, you will see an expired transaction there, and because the link expired before it was consumed. You can do the same thing on the browser wallet. This is the same on the browser wallet. So you can click send money. You enter the information again. Here it shows you the amount you send and the fees. That is configurable. You can decide if you want to show the fees or not. Then again, you have the option to basically show the QR code or copy the link. This would be the QR code. If we take the link, basically put the link into an email, put your email address in there, send it, and then I have here seen the highlighted item with waiting while it sees if it will expire or if the person will cache the link. So that's just to have a quick overview on what Thaler can offer functionality-wise with perfect privacy. Now, Thaler has earned some trust on multiple levels. The Swiss National Bank has issued a white paper on how to issue a CBDC that you can find on their website based on Thaler technology. The Austrian National Bank also published a paper where they showed Thaler as a potential digital euro solution. The European Union gave it a seal of excellence. The FINMA cleared it for launch in Switzerland. As I said, it is open source. It had code reviews of that open source, and the code reviews are also available on the website. So if you want to read all of that, even the code base, it's all there for you to take a look at. So what will happen next? When can you start using that? And we have 4 projects that are in the running here. We will go live with a city currency in Basel. So Basel has the city currency called Netzbon since the 90s. That will be basically put onto Thaler, and that will be the first actual go live that we'll have. And then we're talking weeks, not years. So somewhere in the first half of the year, that will go live. The second go live will be a privately backed digital Swiss franc under the FINMA sandbox. So that should also come in the first half of the year after basically the Basel go live. Then we will go live in the Eurozone with a private digital euro backed by the German GLS bank. So it is commercial bank money, it's not central bank money. So at best it's a synthetic CBDC if they put the escrow with the central bank. And it will also go live in Hungary with a digital forint backed by the Hungarian Magnet Bank. And so those are the projects that are running right now that will come live over the next 18 months, and the first ones within 2-3 months. So if you want to use Thaler, just go visit Basel. That will be your first possibility to do that. If you like to integrate Thaler, or if you want to operate Thaler as an e-money provider, you can even get some free money. The NLNet Foundation has a program called NGI Thaler, where you can apply to get some grants to integrate Thaler with your solution, or to basically launch an additional Thaler operation as an e-money provider like GLS Bank or Magnet Bank. Now, the thing that Thaler does is it turns the world upside down. I was a group CIO for 15 years, and we always taught people, you must have a password that's this long with all kinds of crazy characters that you will never remember. Make it unusable in order to get privacy and security. Well, Thaler does the opposite. You get more security and more privacy, and with a one-click experience. So that's basically, I think, the key advantage, that you can turn basically what we are used to upside down. Guaranteed anonymity for the spender, maximum security with a one-click usability. So that is what counts. So in order to get your copy of the book, DHL caused some challenges. So I got a few extra gray hair because of their super customer service, but the book is supposed to arrive. So after lunch, I'll be out there in the breaks. Come and pick up your copy if you want one. And if you're online, either just scan the QR code or send me an email to book@digitalecho.com with the 1984 code, and I will send you an ebook of it. And that's basically it. There's another book coming out that's much more detailed. If you really want to know everything, that's coming out in April. But 000, so my time is up. Thank you.
That was perfect timing from you. And Leon, I just came up with this. I hope you like my sentence, but thank you for bringing some light to blind signatures.
Okay, good. Thank you.
Our next speaker is gonna be Maria Sáenz de Buruaga. I hope I didn't slaughter that name, but she has a very interesting topic, and she will talk about fee models for CBDC. So please welcome Maria.
Okay, thank you. Okay, thank you. First of all, for the invitation to this wonderful event about digital euro, which is part of our daily lives in Deloitte, Spain, since a while. Here, I'm going to talk about the model fees for CBDCs with a specific focus on digital euro, which I think it will be one of the hottest topics for this upcoming year, because as you will see now, it has a big and relevant impact for the banking industry and for the PSPs industry in general. So, sorry. I will try to stick to the time slots, but feel free to ask any question during the course of this presentation. My idea was just to recap on where do we stand now regarding this topic in the context of digital euro, and then deep dive on the two potential revenue streams that have been included by the legislative proposal. And then we can just discuss what I think are some of the key considerations that the regulators and the supervisors should take into account when designing the DP model of the digital euro. Okay, so as you know, the design of digital euro is still in progress. There are many open decisions that have to be taken. Of course, all of them are open because as far as we don't have a proper and definitive legislative proposal, everything is open. But we can see that there are, let's say, that more defined design options. If we turn the circle clockwise, we can see that this will be a retail CBDC intermediated by PSD2 scope intermediaries. We will ensure for the very first moment both online and offline access, and it should be legal tender with a few exceptions. And the next bunch of criteria, which are the ones that are painted in orange, are the ones that I think are most relevant under current discussions. And one of these design options is the model fee. Because of course here the question is, okay, how are we going to offer the digital euro? Will be similar to other means of payment, will be different. How this will impact retailers, how this will impact users, and of course, how this will impact the banking industry, which is in most of the EU countries, the main owner of PSP solutions across EU. So, according to what we know so far, the proposal and what the ECB is saying is that there will be 4 core principles for the compensation model, which is that the digital euro will be free for users when it comes to basic services. We'll talk about this later. Then it says that there should be network effects in order to create economic incentives for both merchants and acquirers. Another key principle is that there should be comparable economic incentives for issuers. And finally, the jurisdiction says that it will be at some cost, pretty much the same that it happens with issuance of coins or banknotes. So this being the context, given this context, the regulation includes 2 ways of monetizing the digital euro. One is fees that comes from transactions, as it happens with other means of payment. And the second alternative, or even if there are complementary ways, is to build on top of basic services and try to get some revenue for the offer of value-added services. This, of course, is part of the legislative proposal that was published by the Commission in June 2023. And of course, this will be subject to many amendments coming from the European Parliament or also the Council. So we cannot take this for granted, but I think it helps us to somehow structure 2 possible ways of defining the model fee of the digital euro. So let's deep dive on both of them. So on one hand, we have revenues coming from transactions. And here, and what the legal proposal says is that the fees charged by the PSPs, which include merchant fees and also what they call inter-PSP fees, that will be the same as interchange fees. These fees may not exceed the lesser of A, the fees charged by comparable means of payments, or B, the costs incurred in the distribution of the data euro plus a margin. So if we go a little bit further on these two alternatives, we can see that fees from comparable means of payments would include debit card payments. It will also include instant payments, or what they call other future payment solution, which currently we don't know how they will look like. On the other side, we have this other alternative, which are the cost incurred by PSPs when they are distributing digital euro, plus a profit margin. So when we are talking about costs here, it seems that this cost would include the cost of the most efficient PSPs, providing digital euro that represent at least 1/4 of the whole amount of digital euro distributed in the euro area in a given year. Okay. So what we expect is that according to scenarios that have been actually established by the ECB, there will be a low transactionality, at least during the first years. So it's likely that the lowest of both ceilings will be that of comparable digital means of payment. Okay. So me, I'm from Spain, so I will take the Spanish case. I will show you how the picture will look like if we compare to digital means of payment in Spain. In Spain, we have a great use of debit and credit cards, both for POS and for e-commerce. And then we have another solution, which is called Bizum. I don't know if you know Bizum, but it's a P2P solution, account to account, free for users, with massive adoption by Spanish population amounting to 22 million users, I think, which is half of the Spanish population. So, of course, for both debit and credit cards and Bizum, we have different fees that arrive. We have discount rate, we have interchange fees, we have scheme fees, which relate to Visa and MasterCard, and we have a processor fee, which is actually this activity done by Redsys, which is our main processor in Spain. So when we compare digital euro with those solutions, of course, what we find is that for digital euro, there will be scheme fees, because this is pretty much one of the main reasons for launching a CBDC here in Europe is to be less dependent on Visa and MasterCard. So this fee will not be part of the scheme. And then we don't know yet, but it seems that maybe there will not be a processor rate needed. So of course, this creates a buffer. According to this picture, what we can see is that if we have apparently 2 intermediaries instead of 4, of course, fees will be lower. And that's the big question. What can we do with this buffer? So there are 2 alternatives. We have the first alternative is, okay, so if we don't have processors, if we don't have schemes, let's make the fee for digital euro a little bit lower than the one that is actually established for comparable means of payment. Or the other alternative is that this fee will be same level that current means of payment. Okay, because according to the legislation, as I told you before, it cannot be higher than these ceilings. And of course, in any of these alternatives, we have winners, we have stakeholders that are much more proactive on advocating for lower fees. But of course, here, the owners of these comparable means of payment, of course, they don't want to be cannibalized by the use of digital euro and the possibility that the retailers would prefer being paid in digital euros rather than other means of payment. So we have a map of different stakeholders, and we go through both of the solutions. If we keep same ceilings, merchants will not, I mean, there wouldn't be any incentive in order to foster the adoption of digital euro compared to other means of payments. Banks maybe would be happy because with this buffer, maybe they will try to, let's say, be compensated by the cost of distributing digital euro. The ECB would say, okay, I am meeting my objective of issuing digital euro and be prepared and not disrupting the market. And users will maintain current conditions. If we move to the other alternative, which is a little bit more attractive maybe for merchants, of course, because they will accept a new means of payment with lower fees, which can be interesting for them. Of course, banks here, they are not happy with the solution because it will cannibalize current means of payment, including debit cards, but also solutions like Bizum, which are actually the solution that they want to foster because they are the owners of these solutions. The ECB will be happy, really happy, because the adoption will be much higher than in the previous scenario. Of course, we don't know what the ECB exactly wants, if they want to be, if they want digital euro to be like a highly adopted means of payment or not. So here we have different views depending on what announcement or pronouncement we take into account when describing the ECB position. And the end user will be also happy because maybe these savings that the retailer will bear will be translated to more interesting prices for the final user. So of course, this is, let's say, like the main question that we think the banking industry will be trying to address in the following months, and also PSPs and also retailers, which we think that haven't been so much involved in the debate so far. And depending on what kind of model fee will be designed, they could be one of the, I would say, like the biggest winners of all these projects. Regarding the second revenue stream, which will be the provision of value-added services, the framework currently says that we cannot, as banks, for instance, banks cannot offer or cannot monetize services which relate to this basic framework of services. Okay? So for all of them, which include access management services or liquidity management services and transaction management services, banks cannot receive any fee for actually performing services, which is, as you can see, there is a wide range of services under this scope. So banks here have to be, banks and other PSPs, really creative when actually thinking how to build on top of these basic services. And the ECB actually, in recent pronouncement, they are asking the private sector to please build on top of these basic services, start talking about programmable payments and so on, in order to at least make them, I think, more happy about the possible distribution of digital euro. And also because first here, the ECB wants to have banks on board. But banks so far, we think they haven't started thinking about how to build on top of this, okay? So we are helping some of Spanish banks in order to at least have this creative mindset and start thinking on how they can build on top of these services in order to provide new value-added services to users, to merchants, or even to other PSPs. But still, I think this is starting now. And I think this could be a hot topic also for the next year, because this could be really a differential aspect of distributing digital euro under a just comply strategy, or moving to a more proactive strategy that could help the banks to be much more happy about the distribution of digital euro. So having said what's the framework and how banks, merchants, users can be impacted by different models of fee models for digital euro, I would like to highlight just 4 considerations, and I open the debate because I'm pretty sure that you might have other thoughts on this, or just to complement. So here, one specific consideration is that we don't know really clearly what's the ambition of the project. So sometimes we heard the ECB saying that they have to issue the euro to be prepared for the future. We say that buying optionality, because you never know how the threats affecting the monetary sovereignty will evolve. And I'm thinking of Libra, Facebook, other CBDCs, crypto market. And last week in Spain, we also we were attending an event from the ECB. They were saying, okay, we don't want to disrupt the market, but at the same time, we want to make the digital euro a really competitive means of payment. So I think it's not clear what we want to do with the digital euro. If we want to foster the adoption of the digital euro, or if we want just to have something prepared in case that we need to maintain the European sovereignty if one of the threats that you mentioned actually happen. Second consideration here is that for first time in the European life, we want to, at least according to legislation, have a uniform fee model. But of course, the payment systems across EU are really fragmented. We don't have a single discount rate, even if interchange fees are capped since 2015, we don't have a single interchange fee per country. And even there are many cross-country differences. So when we are actually designing the fee model, we have to take into account that we are not in the same page. All of the countries are not in the same page. Third consideration will be that, of course, we want to launch a public means of payment, but we have to be aware that this will bring or lead to the squeeze out of current EU solutions. We don't want to be dependent on Visa, MasterCard, but for instance, Bizum is a European solution built on European standards, which huge adoption by the Spanish society. And the owners of the Bizum are banks. So if you know that the digital euro will happen, and you have to decide whether you invest in your own solution, Bizum, or if you say, okay, given that this will happen, why should I keep investing in my solution while I know that something really similar is going to happen in 5 years' time? I think under this dilemma, the ones that will suffer the most are these solutions that have been built for the last 5 years, and they will be fighting against the threat of a digital euro arising in their markets that could somehow cannibalize their systems, their transactions, and make their solution not sustainable anymore. And finally, last but not least, I think that it's crucial that we need to onboard intermediaries, because they are the ones that could at least build the entry barriers or the barriers for an adoption. We have seen this with PSD2. PSD2 was said to be a game changer for the financial landscape, but of course, banks were in the middle of the success of the PSD2, and I would say that they didn't act in a really proactive way. So if you need to have distributor engaged in the project, you need to satisfy also the requirements, and maybe you can facilitate a way of reflecting on these value-added services, which doesn't seem to be seen so far. Okay. So at the end of the presentation,
Okay.
thank you very much for your attention, and please ask any question. I will be happy to discuss on the topic, even here now or in the break, because I think that we
Yes.
need the coffee break.
So please. Thank you so much, Maria. Sorry for being the boom, and we're already running late. And just quick announcement, we'll start 5 minutes later with the second part. So we're going to have Jonathan Mayer from Intellect EU at 11:20. And with that, we finished the first part of our presentations here in the Innovation Room. Thank you all for joining, also to the online audience. Like I said, the next presentation will start at 11:20. We will also have presentations at the main stage, starting at 11:15 from Alexandre Kech of SFSDX. Thank you all. All right, with that, we are starting the second part of the presentations here at the Innovation Room. Welcome in. And now we're switching up the topic a little bit. The second part of Innovation Room will be about new market infrastructures and open digital money ecosystems. And our first presenter is going to be Jonathan Mayer from Intellect EU. So please welcome Jonathan.
Thank you. So thank you for taking the time to be here today.
Hi.
What I would like to talk about is...
Fine.
Okay, perfect. So my name is Jonathan, work at Intellect EU, and we're focused as a company on how we can enable emerging technology in the regulated industries. And what I would like to present today is our Catalyst operating system, and doing that by showcasing a DVP solution where we will have settlement orchestrated on one system. The assets will live on another distributed ledger technology, and then payment will happen over fiat rails such as Target Services, SWIFT, and wholesale CBDC. Now, building up to this event and over the past months, I've been reading through quite a few papers and trying to find what are the different patterns that are happening in the industry. And one thing that stood out was a definition of the Bundesbank on how they define money and where they set a payment instrument. On the one hand, it needs to be stable, but also it needs to be universally convertible into other forms of money, and it needs to happen with as little friction as possible. And I found it to be very interesting, and we'll come back in the next couple of slides as well. And then a few examples of the most forms of money that are being used right now. Now, what we see happening in parallel with blockchain technology is that we're currently more in the foundational stage, where we moved away from let's use technology because of a hype, but let's really see what is the value that distributed ledger technology can provide. And a few examples here from a study from the Value Exchange, where about 1.3 billion in US dollars of live digital bonds has been issued. But also if you look, for example, in the US, what's happening with Broadridge, where they're handling about $1 trillion on their platform of dollars. And while those numbers might be very minimal, if you look at the bigger picture, it showcases us that we are really moving in from really driving a fundamental shift of what technology can bring and help us to bring synchronous processes together. So those are a bit of the two things I was seeing happening in parallel. Now, a good paper that also came out from Euroclear, Clearstream, and DTCC that showcased, okay, we are currently more in the defining the fundamental stage, but what is needed to drive this to adoption? And there are a few challenges that come into play, where the three main ones that we were seeing was the infrastructure management that is needed, and it also was presented in another presentation this morning where we're talking about the highways, where the infrastructure management is a very important one. Secondly, it's the operational resilience. When this is running in production, how do we do the management of really the core technical systems that are needed, and how do we ensure that this can really run in a production grade environment? But also very importantly is that integration part. And that brings me back to that first definition of a payment instrument, where different forms of money, they need to be readily convertible into other forms, and it needs to happen with as little friction as possible. Now, these were the challenges that we see and also were presented in that paper, is how to move from foundational stage really into adoption stage. And again, we're moving from using technology because of a hype to really now having proven that this technology can deliver value. Now the challenge is how do we bring that into production? Where there's regulatory aspects, there's the business value of it, but also we have the technical aspect. And that's exactly what we want to cover with Catalyst, is how do we abstract away those technical pain points and really allow us to focus on what is the business value and how do we move from conceptual stage really into production. So Catalysts we define as an operating system, which consists of a blockchain manager, which is then more how do we deploy and manage the infrastructure, but also the integration manager side, which is more for the interoperability, connecting legacy systems with blockchain systems, but also then the different payment rails. So if I had to present Catalyst in one visual, then this would be the one I would pull up, where you really have to see it as that layer that sits on top of the infrastructure that helps us to manage the infrastructure underneath, provide that operational resiliency, and now also provide that connectivity and interoperability and make sure that this all happens seamlessly. Now, that's a bit of the background. What I would love to do is showcase that in a demonstration. The video will come in a bit, but first to give some background on what we will showcase. So we will showcase a DVP that is going to happen on one distributed ledger technology called Canton, where it will be orchestrated. The assets that will be settled live on an EVM chain. That could be Hyperledger Besu or Polygon. But then actually the settlement will happen on a fiat rail, which could then be Swift, Target Services, or a wholesale CBDC on Hyperledger Fabric. And where Catalyst comes in is really facilitating that operational part, the infrastructure management, but also that seamless connectivity and integration between those different systems. And then I'll showcase the video in a bit, but just to give some background on what our vision is with Catalyst and how we want to position it in that whole ecosystem is really making sure that we can have seamless connectivity and integration, so that we allow for different systems that live on different blockchain technologies or distributed ledger technologies to allow that connectivity to instantly settle different payment instruments. And that's also very interesting, as last 2 weeks, the European Commission came out with a push for instant payments and how can we connect now those different more emerging technology systems with those payment rails as well. We also firmly believe in standards. So it's really making sure, okay, if an instruction is issued on one system, how can we easily transfer and convert that into those standards, ISO 222, that then can be sent to different payment rails. And really making sure how can we provide that compatibility with different global market systems. So how do we allow really Catalyst as an operating system to easily integrate with different systems, as we see that the whole financial service industry is growing more into different networks, different payment rails. And we need a solution that can help us to drive to production, to can accelerate that adoption, but also move forward and connect all of that. I might need some help. So while the video is being set up, what we will showcase in the first 3 minutes here.
Is there audio?
No. What we'll showcase in the first 3 minutes, and bear with me, it might be a bit technical, but it's just for 2 minutes, is how we will actually deploy all the necessary components. So what you'll see here is our Catalyst blockchain manager, which allows us to very easily set up a Canton domain or a Canton network, and then the necessary participants. So as you can see here, we are really streamlining that whole process, providing maximum automation, but still the highest degree of configurability as well. So this streamlines the whole process and abstracts away the pain points of technical implementation and allows us to focus what is the business value that at the end of the day we want to bring. So what you're seeing here is that we are creating our domain, which then can be seen as the network where the different participants will live on. So as I was showcasing in the first picture, you see Bank 1, the CSD, which could also be a register, and then Bank 2. And what we're doing right now is we're setting up that network. We're creating the different participants, and the UI that you're seeing is a bit speeded up, but that showcases more on how we could easily deploy the different components. So what we're doing right now is we're looking at the participant that lives on Ledger. Again, bear with me, it's a bit technical for 2 minutes, but it's just to showcase how we streamline that whole process of now also creating the different parties on the network. So what I'm showcasing right now is that how we can deploy the orchestration smart contract, which then is for the CSD. So that is right now being deployed. Once we have that done, you can see here the network is up and running. We will now connect that one participant to that network that was set up. As you can see here, it's a matter of a few clicks. And what we have now done is we set up that, I'll call it a blockchain node, that participant that is connected to the network that was created, which will do the orchestration of the DVP. And now what we're doing is creating those different parties on the network. So we created Bank 1, we are creating Bank 2, and now we're creating the CSD. Now these parties are what I would call the legal representation that would live on the ledger. Bit of background right now, we are just linking that to the technical user, so we're just linking that up. And then what will happen is those 3 participants, they will be involved in that whole orchestration process of DVP. So this part, a bit more streamed up just to move forward to the actual demo. But once this is done, you can see that we've created the domain, which is the network. We've created the participant, which is then more the legal representation on that network. And now what we've done as the final step is actually deploy the application. So what I will showcase right now is how we will have settlement happening of one asset that lives on an EVM chain and the payment that will happen on a fiat rail, so over SWIFT. Here you can see the dashboard that a bank one may have, where if you click into more details of the trade, you can see the current status. So it was not submitted or initiated yet, but you can see already some information of the asset address, which you can see on the right. You can see what is the currency that you want to settle. But now if you move into the CSD, we can see what are the different trades that have been programmed up front. And we will now submit one of those trades for actual settlement. And we'll start with the one that will settle over SWIFT and target services. And as we will go into the details, you will see actually the different steps that will take place, where the first step is we will deploy an escrow contract on an EVM chain that will then be used for the assets of the seller to be placed in escrow. So right now we are deploying that contract in the background, which will take a few seconds. Then once that's happened, you will see that the status will be moved to transfer to escrow, which means that asset that we want to trade will be placed in an escrow account on, again, a different distributed ledger technology. Then what will happen is as soon as that asset is transferred into escrow, as you can see right now, the payment will be initiated. So there will be an instruction sent from one system, from that EVM chain, to secondary system, which is then Swift network, where we use Swift Alliance access for that, and then also connect to target services. You can see a bit of the different steps that are taken, and happy to showcase that with a bit more time afterwards and even show our live system. So you can see here the status that the payment was executed. As soon as the payment got executed, again, a trigger will be sent to that escrow contract to then release that asset that lived on the EVM chain to the buyer. Now, all nice and well to see it in different statuses, but here you can actually see the block explorer, and you can see that escrow contract where we go a bit more in detail. We can see that asset that was first deposited by the seller. And then once the payment happened, that asset then also got released from the escrow account to the address of the buyer. You can see the different details in our dashboard. So the token address is the address of the asset that we traded here. So what you actually saw in the past 5 minutes is how we speeded it a bit up, but how to deploy all the infrastructure, and then how also to execute that DVP. What I'm showcasing now is that the payment actually happened on the Swift network. So if you look at the dashboard from Swift Alliance Access, what we can do is we can do search, and we can actually put in that keyword of that specific ID. And then you will see that the payment actually happens. So what happens in the background is as soon as that instruction is sent from one EVM network, inside of Catalyst, we will create that ISO 2002 message, which is a PAX 008 message, which holds all the instructions for payment. That payment will then be sent to the Swift network. We could specify the service name in there as well, which means we can connect to different target systems, target services as well. And then we will get a response, a confirmation of payment back in the form of a track 001 message that actually showcases that the payment was happened. Now, this all happens in the background, and where Catalyst helps is to connect those different systems, but even create the necessary standards from it. Allows us to have messages from one system sent to another system. So we go back to bank one now. We can see that that specific trade was being settled. And you can see, okay, what is the bank address, what was the escrow address, and the different steps that have been taken. So what we've showcased again is how Catalyst streamlined that whole journey of deploying it, but also how that settlement happened in the background. Now, what we're going to do now is, instead of having the payment happen over Swift or target services, have the payment or the settlement happen over a wholesale CBDC, where again, we submitted now the trade for settlement. You can see that is in progress. It's again the same steps. We first deploy the escrow contract on an EVM chain. Once that is done, we will send the instructions for the seller to bring or to deposit that asset into that escrow account, so it is being locked. Again, what Catalyst facilitates is that whole communication between the different systems. So once it is in escrow, the instruction will be sent to initiate the payment, which will be on Hyperledger Fabric on the wholesale CBDC that we've deployed. The process will also happen a bit more quicker than over Swift, as you can see, as we're using distributed ledger technology. So the payment got executed. As soon as the payment got executed on Hyperledger Fabric on that network, we send an instruction to that escrow account on EVM to release the assets to the buyer. and the payment has been executed, where we did a change of one asset and did the settlement over wholesale CBDC. Again, if you go into the escrow address, you can see that the asset got deposited and got sent to the buyer address. I will showcase next is if you go inside, so you can see the security address. We'll click in a bit on the wholesale CBDC just to also showcase that this actually happened on Hyperledger Fabric. So what you'll see now is, again, our Catalyst blockchain manager, where you can easily query the ledger as well. So what we'll do is we'll check what is the balance of Bank 1 and Bank 2. And what you will see is that Bank 1 will have a balance of 100,000, 150, because the assets that we wanted to settle near the payment of about 150 in the currency of using wholesale CBDC. And then Bank 2 would actually had to pay for it, that got deducted. Again, finally going back to the dashboard of Bank 1, we can see that we now settled 2 trades, one using fiat payment rails, the other using a wholesale CBDC. And all of that was, on the one hand, facilitated with Catalyst, where Catalyst helped with the infrastructure management of all the different components, being it the EVM network, being it the Canton network, where we can orchestrate that whole DVP, and also provide that connectivity from those different systems. So again, what we just showcased in a matter of minutes is how easy Catalyst facilitates the deployment, how Catalyst allows us to connect those different systems and provide that interoperability and integration, and most importantly, being it with traditional payment systems, but also with wholesale CBDCs that might live on DLT. And where it's really the vision of Catalyst is how can we accelerate the evolution of global markets? How can we bring to adoption what the whole digital asset space, and how can we connect those legacy systems? How can we connect those different network types? And how can we connect, okay, what's moving forward? I see there's 2.5 minutes left, so happy to answer any questions, but I'll stay with this slide just to give an overview of what we've just showcased and the gap that we aim to fill in with Catalyst. Thank you for attention.
Thank you. Do we have any questions for Jonathan? Maybe.
Yeah, a little bit. Can you expand a little bit on the infrastructure? How is it built? Is it like hosted in some cloud, or is it possible to deploy it on premises? Is it like label?
Yeah, so the question was, how does the deployment aspect work? Is it something that we host? Does it allow for flexibility on premises? And there the answer, like something we did when we developed Catalyst, is we want to make sure that we have no cloud vendor lock-in. So this means this can be deployed on premises, this can be deployed on any cloud. It could also be provided by an intellectual or another party as a service. So it's really focused on how do we create that flexibility from different parties, because we believe that on the one hand, there will be different networks that need to be supported, but also different infrastructure types. And as a financial institutions, you need to have control over your system and your infrastructure as well, because of data compliance, and you want to have some control over the network, especially with what's being pushed now in terms of regulatory.
Other questions? Perfect. Yes.
Yeah, thank you, Jonathan, on a very nice presentation. You mentioned that your system is running on the EVM blockchain, right? Is it interoperable for other blockchain, non-EVM?
Yes. So Catalyst right now, as you can see, it supports Canton. So that was where we orchestrated the DVP. The wholesale CBDC lived on Hyperledger Fabric, again, also supported by Catalyst. On the EVM side, we have Hyperledger Besu and Polygon. And then the 2 other ones that we support are R3 Corda and Stellar.
Stellar.
Yes.
Cool. Thanks.
Right. I don't think we have any questions from the online audience as well. And
There is one last question from the online.
Okay.
So it does not work when you're offline, right? This is the question from your online audience.
Completely offline, no, because you need to facilitate connectivity between systems. But the system is event-driven, which means if one of the aspects goes offline, it will just wait until the system goes up again, and then it will facilitate. So we have that resiliency in place.
Perfect. Then I think we're perfectly on time, 10 seconds left. Thank you, Jonathan.
Thank you.
All right. With that, we move on to the next presentation. Our next speaker, actually, you came from the US, I think.
Yes.
It's going to be Karen Ottoni from the Hyperledger Foundation, and she's going to present on open source for CBDCs. Thank you. Use this, and I'll just get you water. Yeah?
Oh, thanks.
Perfect.
That'd be great.
You can start.
Thank you. Hi, everybody. Good afternoon. It's a pleasure to be here. Karen Ottoni, Senior Director of Ecosystem and Strategic Initiatives at Hyperledger Foundation. I'm going to talk to you here today a little bit about open source software and open source communities and its potential to help the CBDC use case, and the potential of the sector, what's being done, some examples, and then how to get involved. So if you're not familiar with Hyperledger Foundation, we are the open source global ecosystem for enterprise grade blockchain technologies at the front and center of what's being done in production deployments in a variety of sectors around the world. We are a part of the umbrella of the Linux Foundation, which hosts open source projects in many different areas, many different technologies, and has been around for more than 20 years and really has established best practices in open source that Hyperledger leverages. We like to call ourselves a collaborative duocracy. If you haven't heard that term before, it means basically that the people who are involved are the ones who get to make decisions and take leadership positions in our community. That's really a foundation of open source at Linux Foundation and at Hyperledger as well. Our three pillars of our community are the foundation itself, so the nonprofit that's hosted by the Linux Foundation, our member organizations. So these are companies, institutions, associations that are leveraging our technology, participating in our community, contributing. And as a result, they become members in order to ensure that the sustainability of that code and those communities continue. We also then have the broader open source community. You don't have to be a member to use or participate. That contributes via various different leadership positions, which I'll touch on later, contributing code, etc. So not a lot of people realize this, but you already are using open source software all the time. You can see here in this global open source spotlight that Linux is the most widely used open source software. It's what the internet runs on. But of course, there's cloud, there's data management, there's Kubernetes. This is a part of our daily lives. Is it not open? Okay, I just see I'm looking back, so maybe it's not showing. Yeah, it's a little small, so maybe you can't read it. But I want to kind of give it a little bit of a tangible feeling. So if you have an iPhone, you can pull it out and see how even on something as proprietary as Apple, you are using open source. If you go to your settings and go to general, and then you scroll down to legal and regulatory, and then you click on legal notices, you'll see here, there's notices, and you can keep scrolling this for like almost 10 minutes, like it'll just go forever. These are open source software licenses that your iPhone is using. So it's trusted technology. It's something that's part of everything we already use and do. We have three main principles at Hyperledger Foundation because we believe that the future of decentralized technologies is one, open source, open development, and open governance. Let me define what those are and what we mean by that. So open source, very simply, public repository of code that anyone can use, evaluate, contribute to, and build on top of. Open development goes a little bit farther. So this is where the code now has a community that's actively building on top of it in the open. Then open governance takes that a little bit further, where the procedures, the rules for the community, the decisions made about the roadmap are also openly defined and managed. Hyperledger has been around for 8 years. We actually just celebrated our 8th year anniversary in a webinar you can find on our website, had all the leaders of the space. IntellectU that just presented before me, they're actually one of the founding members of Hyperledger Foundation. And you can see that they were leveraging Fabric and Besu in that recent demo as well. We have 8 different graduated projects, 5 that are incubating, and many, many, many Hyperledger labs. This is a place for new code to be contributed that can be developed in the open. And a lot of groups, we have SIGs, we have regional chapters and working groups and meetups worldwide. So this is the community that we are fostering that's contributing and leveraging our code. Our technologies are being used in a variety of sectors for all different kinds of use cases. But of course, relevant to the topic here today is financial services. Our member community is what helps make the foundation possible. So we have premier members, general members as well, and these offer lots of different leadership opportunities within our community. So these are companies that are building products and services using Hyperledger technologies and ensuring by becoming a member the sustainability of those communities and technologies that they're relying on. We have associate members, DEA is an associate member, a lot of central banks as well. Bank of Norway, have Lassie, who's going to be speaking with us later, from the Bank of Norway, Banque de France, etc. So we invite you to engage in every which way possible, and I'll talk more about that as well. So since 2015, Hyperledger has been building, shaping the enterprise blockchain market. We really are at the center of the enterprise-grade blockchain ecosystem, building different frameworks, tools, and libraries that support production-ready technologies and projects. But not all open source is created equal. This is sort of some definitions that I don't think a lot of people necessarily realize or think about, because open source is sort of like a general term, but I want to define these for you so you can better distinguish the difference between different kinds of open source projects. So there's dump and run, which is simply you publish your code. So you don't necessarily have updates that are made to it. You don't necessarily have a roadmap. Users have very little recourse. It's just something that was published publicly. Another type of open source is the benevolent dictator. So you have an organization or an individual, they open source the code. They may allow some contributions, but the ultimate authority on merging code and contributions is always with that benevolent organizations. They are the ones that approve it. Some contributors may come from outside, but maintainers are always from the benevolent organization. So often when you hear that someone has open sourced their code, it is often this benevolent dictator example. You can also open a company product. So this is where you just simply, it's similar to kind of dump and run. You may allow outside contributions or not. They'll follow some releases and best security practices. What we encourage, what we want to see more of in this space is openly governed open source. That's code that has transparent documentation, decentralized meritocratic governance. It's hosted under a third-party entity like the Linux Foundation or Hyperledger Foundation. That stewards sort of the IP and the trademark of that code. Anyone can join and contribute. There's a clear, most importantly, it's a clear and public process for leadership in this space, for becoming a maintainer, and no restrictions on payment or for that maintainership role. So anyone can become a maintainer as long as you do the work. That's the whole duocracy part. So a lot of the projects at Hyperledger and at Linux Foundation are openly governed. A lot of people come to me all the time saying, well, like, especially with government institutions, oh, but it's more safe, it's more secure. They both have their advantages and disadvantages, of course, depending on what you're trying to do. But neither can really be deemed inherently more secure, because security really depends on a lot of different factors, such as your development practices for open source, the community, the health of the community, the vendor support in there. If you have one company developing the software, you have basically a single point of failure. If that company stops doing that, you have to then find another way to do the infrastructure that you're doing. And at the Linux Foundation, we actually about a year or two ago started this Open SSF Foundation. So it's open source security foundation that's focusing on developing best practices for open source. So if that's something you're interested in, I encourage you to take a look at that project. As I was kind of looking up different examples of open source for public sector, I was pleased to find that actually here in Germany, you have a sovereign tech fund. This is a project initiative by the German government that supports digital sovereignty by maintaining open digital infrastructure. So they are maintaining different open source code projects. And so you can take a look at the website. It was very interesting to find that. I thought that was really relevant. In this world of open source global spotlight research paper, government is really seen to be one of the primary beneficiaries of investing in open source. So I really want to see, and this is part of what I'm doing and connecting with central banks, BIS, et cetera, is helping them engage in that more. There's a lot of examples already of public sector supporting different blockchain open source projects. So we have EBSI here in Europe. I'm sure many of you are familiar with EBSI. It's one of the first public blockchain services in Europe to create cross-border services for the administration of businesses, different ecosystems. We also have LACchain in Latin America. This is something that was started by the Inter-American Development Bank. It's actually, I think, the largest permission public blockchain out there. They haven't been able to find anyone who has more nodes. Alastria is another one based out of Spain. And then in Brazil, we have the Rede Blockchain Brasil, which is intended to work on citizen services and transparency and funding. If you're looking for a sort of star example of the public sector in working with open source and engaging in it, I want to highlight the government of British Columbia. They've done significant work, not just as a prolific user of open source, but they actually contribute. They're really seen as an open source innovator in this space. They heavily contribute to our two decentralized identity projects, Indy and Aries. They first started off with something called the Org Book, which was an example of essentially a registry of companies in British Columbia that you could independently verify, for example, like liquor licenses and things like that. And now they've also done a lot more in the identity space with this digital wallet. They really are innovating and an example of how when the public sector really starts to leverage and engage in open source, they really see a lot of success. So I encourage you to look at what they're doing. We have developed some materials back to sort of the CBDC focus here. We have an ebook on Hyperledger in action for CBDCs. So please take a look at that. You can scan that QR code. I encourage you to read it because it's, of course, there's lots of trackers out there like what the Atlantic Council maintains. This focuses just on the ones that are using Hyperledger technologies. I'll wait until you guys are scanning to.
It's too small.
Oh, is it too small? Okay. Well, let me just come and I'll send it to you. Come to me. It's also on our website. Some of the examples that you'll find in that ebook are the Central Bank of Brazil. They're using Hyperledger Besu for their Drex pilots. Banque de France has also used Fabric and Cacti, which is our interoperability tool, for their research. It's also part of the pilot regime experiments going on right now with the DL3S, I think it is. So they're currently experimenting with that. Swift is using Hyperledger Firefly. The Swift sandbox is pretty big. It's got 18 different central banks, lots of different financial institutions participating in that using Firefly, Quorum, and Corda together. And then Bank of Norway, as I touched on earlier, and you'll hear about later on today, used Hyperledger Besu. And I want to applaud Lassie and highlight that he was part of the team that actually contributed the code that they worked on for their experiment to GitHub and open sourced it. This is, I believe, the first of its kind being done by a central bank in this space. So we were really excited to see that. It's the kind of thing we want to see more of, to encourage more open sharing and development. This is a map that you'll see in the ebook when you download it, and it shows the different projects around the world. I keep this up to date. Hopefully it's accurate. It's got all the projects that are public that have announced which technology they're using. And on the side there, you'll see the various Hyperledger technologies that are being leveraged. So what we really are trying to do is making a case for there to be more open development as part of the CBDC research and experimentations happening around the world. Why? Because the power of a community will always outperform the power of any single individual or company. Transparency and openness is really key to this space because you're developing something new, and to really develop a trusted ecosystem. We believe that transparency and openness is the way to go about doing that, especially given some of the criticisms of CBDCs that you've seen out there. The value needs to move across different systems. And so making the technology infrastructure neutral and open makes interoperability more easy to figure out. And the result is you have more production-ready technology that's hardened, that's tested, that's been reviewed and evaluated to support mission-critical regulated systems. Why we believe that open source is the way for collaborative innovation is you drive this optionality, you have the vendor neutrality. So you, if you end up needing to switch vendors or someone goes out of business, you have other vendors that you can work with for that technology. There's a lot of operational efficiencies that you can achieve as well. Duplication of effort, avoiding that. We don't need to have 180 central banks working on their own CBDC. A lot of what's being developed is probably 80% of it very similar and can be shared and tested. And then what you need to have be closed or secret, you can do that. So you can devote more of your R&D into the differentiating part of your code rather than what's the base pretty standard code. What's developed openly is more likely also to become a common standard because you have more people using it, leveraging it, and so that can facilitate interoperability in this space as well. And the Apache license, which is what is used primarily at the Linux Foundation, protects any contributions that are made to the code as well. So with CBDC, the transparent part, I think, is fundamental. The public auditability of the code, the fact that the research that all these central banks are doing, these are public goods and really should be shared openly. You can argue that the security, the visibility of everything makes the bugs more easy to address, the vulnerabilities more easy to fix, and you have no single vendor that controls access or knowledge of the code. You benefit from community improvements, you have outside feedback, and you can assure that the software has been reviewed. And then you have that global collaboration for standard setting. So these standards can propagate without really direct engagement. They can become almost de facto just because people are using it more. Lower friction and prevent duplication of effort, really. Some misconceptions. So I've touched on a little bit on this before with the security. So there's no evidence it's less secure. You can actually argue that it's more secure because you can fix the bugs more easily. A lot of critical software, like I said, that you already use, like SSH, which is the software that's used for when your administrator remote controls your computer. Sure, everyone as a company has had it at some point when your computer stops working. That's open source. Browser engines are open source. So it's already being relied on for critical infrastructure in many of the things that companies and governments do already. Sometimes people talk about the provenance issue. We don't know who's building it. Again, a lot of you are already using this. But we actually do know who's building it. Most of the developers that are involved in building open source projects come from major companies, like the ones you saw in our member community, Linux contributors or Intel, Google Hat. We know who's building this code. It isn't really as much of a mystery as you think. And then you don't have to open source everything. Like I said, you can just open source what's sort of at the base infrastructure that's shareable, that helps move the use case further, and whatever you don't want to, or is your differentiating factor, you can keep that close to yourself. Some of the challenges are who decides. So I talked about the duocracy aspect. The maintainers, the ones who are involved, ultimately are the ones who decide what happens with the code. So there's funding sustainability for every open source project. That can sometimes be a challenge. And generally, even though there are, threat actors, generally it's outweighed by code quality improvements and catching bugs early and often. So open sourcing software can really increase rigor, transparency, improve collaboration, and it's something that we are trying to encourage participants in the CBDC to use and do. An example of this is Open CBDC. This is developed by MIT along with the Federal Reserve of Boston. They contributed openly the code that they developed. It was been used and reviewed by a lot of the G7 central banks or economies, and is a good example of what we want to see more of, sharing openly so that others can review, test, evaluate, and leverage it. In Hyperledger, this is a timeline of their various projects that have been contributed to our community. Not all of these are necessarily used in the CBDC space, but it's kind of helpful to see the evolution of our open source projects. You're welcome to have the slides if you want, just email me. I'm not going to go deep into each of these. I'm just going to highlight a couple things. You can find all this information on our website, but Hyperledger Basis was mentioned earlier. It's being used a lot in financial services space. I wanted to highlight here that something that's coming soon, that we'll be announcing soon, is a Basis for Financial Services working group. This is a group that will have a lot of participation from the private sector. Lots of big banks are getting involved to help influence the Basis roadmap to make it the features more relevant for financial services applications. So if that's something you're interested in and want to get involved in, again, anyone can get involved. Please let me know. Come talk to me. Hyperledger Cacti is an interoperability tool. If you're interested in interoperability, I highly recommend you look at Hyperledger Cacti. Hyperledger Firefly is another one, that's the one I mentioned earlier, being used by Swift and also in Brazil as well. What I want to touch on with Hyperledger Firefly, they're open source supernode, but they have this slide that shows exactly what I was explaining earlier. See all these like yellow squares here that you used to have to build yourself. All of that was open source, and as part of Hyperledger Firefly, you can now leverage that. You can now focus your resources on the business applications. So this is a real visual of how you concentrate your R&D efforts, where you actually differentiate and leverage open source technology where you don't. So why should you get involved in our community, become a member, participate, use our code? You can accelerate the time to market for your project because, again, you're not spending all the time building everything in those yellow squares. As a developer, you gain significant experience. You can talk about the work that you're doing because it is open. You make sure that the technology that you're building on top of stays active by getting involved in using it. Drive adoption to your products. Tap into this broad global community for resources, for help with your work. And we also have a very healthy vendor ecosystem as well if you need more assistance with services or products. And you can help by being involved, the duocracy, shape the direction of these projects. If you want to connect with our community, we're on Discord. All these projects have Discord channels. You can go there, ask questions, talk to the maintainers directly, get help. So I encourage you to join our Discord. And ultimately, open source software is a two-way street. you got to contribute back to the communities to ensure that the technologies you're building on continue to be viable and sustainable. So please come talk to me. I want to hear about what you're doing, what you're interested in, or roadblocks you've had to using Hyperledger technologies or getting involved in our community. I look forward to speaking with you and seeing you at our future events or seeing you online at our various communities. Thank you so much.
Do we have any questions for Karen? We actually do have a little bit of time. Any questions for Karen? Yes, please, sir.
So the process for reviewing contributions? Yeah, so Hyperledger Besu, just I went very quickly through there, but it's a client of the Ethereum network. It's part of their client diversity program. So everything that's being done in the Ethereum community applies to Hyperledger Besu as well. Anything that's being innovated upon in the Ethereum community is a part of Besu as well. I think about it changes all the time, but the last time I remember looking about a few weeks ago was I think 8 or 10% of the network is on Ethereum as one of the clients. So, but of course we do have Besu maintainers and they have their own process. So in terms of how you submit pull requests, etc., all that documentation is there in our Hyperledger Besu documentation on our website.
Great. Another question.
What Peter just mentioned is the EIP is maybe one aspect of open source that creates some kind of open standards that everybody can use and connect with. So what we see also here in the DLT world is that companies are using these standards to build a foundation, and then they put on top a closed system and providing services to clients. There's a system that is as close as before. Yeah? Like for example, for the iPhone, where you have a lot of open source software inside, but the system and the protocols are maybe quite quiet. How do you see this? I mean, in the end, where does the open idea break through this cluster of closeness?
Well, I think it really depends on the use case. So I think there are use cases where it's that kind of a system is more relevant. If you want to be working, on the public Ethereum ecosystem, then you should go there, right, and build your, your product or your service over there. But generally, people want a little bit more optionality. They want some sort of mix, which is why Besu can be used in both a public manner and also permissioned manner. And I think it just, especially for regulated institutions, financial institutions, they want to have something where there's a little bit more control over what is public and what is not. And so I think it really just depends on the use case. I think a lot of people do see that eventually everything will be done on public Ethereum. That's why a lot of people like to work on Besu, because there's that optionality that it can be public later on. But that right now, it just isn't necessarily feasible given maybe the privacy restrictions or performance restrictions a certain use case has. And I wanted to just add to the other question. Besu also has they have regular, and most of our projects have regular community or contributor calls that you can join as well and listen in and talk about improvements. Go ahead.
I represent one of the other side. I would say representing a company that has open source almost everything that we have got. We work in identity, right? So there is a strong pressure from potential customers that everything becomes eventually a public good. We are now between, I would say, the benevolent dictator and the open source company transitioning. But we are seeing that the more we move in that direction, the more we are siloing ourselves into a services-based model instead of a product-based model. So you either control some part of the infrastructure, can somehow monetize the infrastructure. Or if you are going that route, in the end, you're going to become a system integrator or a services company, not a product company anymore. Because once you have given away your code, right, the next thing you can give is your governance. And if you give away your governance, then you retain nothing, right? And then you're creating business opportunities for system integrators and service providers, but you no longer can be a product company by itself, right? So how do you solve that conundrum? Because we like to be a product company, we like to innovate and keep the product. We don't want to become a system integrator.
So a lot of the companies that are part of the Hyperledger community are, either selling a product or selling a service that they have built on top of the technology. And even though you contribute your code base openly, you maintain generally leadership in that community, right? You're a maintainer, you have several maintainers in that. So you may not necessarily be controlling all of the infrastructure, but you are generally usually continue to have a leadership role in that community. And that therefore can leverage that into whatever products and services that you were or can then continue to build on that afterwards. And I'm happy to talk to you later about the different business models. We have a few of our members here too that can chat with you about that.
Again, thank you, Karen. If you have any further questions, I'm sure, Karen, you'll be able to answer them directly.
Thank you, everybody.
All right. Okay, let me. Now I do have good news and bad news. The good news, sorry, let me start with the bad news. Unfortunately, our next presenter, Greg Scullett from Swirl Labs, is not able to make it here today. He sends his sincere apologies, but the good news is you have a few minutes earlier to go to lunch break. We will start at 2:10 p.m. here in the innovation room with SAP. However, be aware the presentations on the main stage will start earlier. They will start at 1:30 p.m. With that, thank you all and enjoy lunch. Bye.
Ihr beiden bei uns erlebt
Okay, okay.
Ich würde sagen,
Ja, wir wollen es hier einfach sprechen.
ja, kann man.
Okay, super.
Okay, perfekt.
Gonna price one.
Das ist unser Limit, ja. Was kann man, ja? Okay.
Just which answers we are again like yesterday again if they have.
So you can just scroll.
Yeah, it's okay.
We've added, yeah.
That's okay.
Perfect. So before we start, just some housekeeping. I hope you already had a recharge with the lunch break. We have a slight change to the agenda, but for now, we'll have Bernhard and Darius present us the digital money to the enterprise applications from SAP. But Dr. Karahan from the Turkish Central Bank is not joining us today, unfortunately. So we'll be doing the switch. As the next speaker, we'll have Mr. Porter presenting us the sand dollar. So we have a full block of presentations, and then we'll have the break as planned. And the speakers will have 25 minutes, 5 minutes bonus from us. So stage is yours. You can start.
Great, okay, first, thanks a lot for the bonus. So I'm Bernhard, my colleague Darius will join me today on stage. Great pleasure being here today, a couple of known faces already in the room. I guess now it's time that the rubber hits the road. So it's not only talking about what digital money is, what it eventually can do, but what it will do tomorrow. I think this is quite important, and this is why behind our presentation, integrating digital money into enterprise applications. Because if you have the best form of digital money, either the central bank digital currency, tokenized stable coin, Bitcoin, you name it, if you cannot bring it in a reasonable manner into enterprise processes, you know you don't do shit at all. I basically started working on that project roughly 2 years ago for SAP, and actually completely came to that kind of line of thought. It basically originated with a customer in Asia Pacific, who reached out to us and said, hey, I'm a good rated company. I want to do business with Bitcoin and Ether. So my customers pay me with Ether. And basically developing a gambling platform. You can buy virtual horse, the horse races, to pay the horse, to purchase the horse with Ether, and if you win, you get out of the price of Ether. And they said, that must be very simple to implement in your ERP solution. Why don't you just add another currency? And of course, it's not that easy. And this is why we're here today. Now, when it's probably usually the disclaimer from a large company in the front, it's still a research project, and that's why I said it will hit the road. And then I like to say eventually tomorrow, so this is the usual disclaimer I have to put up front. Now, when I then went out, very excited, Bitcoin, Ether are the future to my customers here in Europe and said, hey, wow, why don't you do your business in Ether and Bitcoin? And I've done everything for you. They said, stay away with Bitcoin. That is rather the case. But they shared with us their real problem. They said, for us, it's practically impossible to do reasonable business models in the traditional finance system if it comes to cross-border payments. Why? I come from the mid-market business unit of SAP, so my customers have probably something like 200 million revenue, typically rather small invoice amounts, something like $500, $1,000, but in global companies now. You all know, if you charge a $500 invoice, a $1,000 invoice, and you incur fees of $20 to $50, it's a nightmare. And worse, it takes days, 5-7 days, to really sell. And it will be problem. And here you see from CryptoCrunch app, this is a pretty recent chart, and please note the logarithmic scale about kind of costs to send $100,000. And it's outrageous in a way, I would say, as a mid-sized company. So $50, 500 euro invoice, and with blockchain technologies with digital currencies, you can basically bring that into the range of cents. Good. And you know, always transaction costs have to be low, fast, transparent, and you also know that kind of banking system, of course, and as in between and blockchain can help better. And this is basically the problem we are trying to tackle. And when I go to my customers, typically say, yes, it's a cool technology, it can help you solve the problem. And they say, hey, how does that work? What kind of settlement instrument do I use? And we heard today already a lot about central bank digital currencies, tokenized deposits, deposit tokens, fiat stablecoins, and so on. And we believe in today's world, if you really want to have kind of open means of payment, we believe it's a fiat stablecoin, and we heard about USDT, USDC, but we also see denominated stablecoins probably not so popular, but being out there in the market, such as euro, just to name one, or Euro circuit to name the second, still being very, very interesting means of settlement. Now, coming a little bit more to our solution, and this is basically what we call the digital currency hub. Now, what does the digital currency hub do? On the one hand, the digital currency hub enables our customers receiving payments in digital currencies. Again, we very much advocate for stable coins, but we are pretty agnostic to whatever resides on the blockchain. And of course, on the other side, making those payments in digital currencies. All very, very tightly integrated into your financial core backbone, which is an ERP system for enterprise resource planning. And of course, we tightly to integrate in our very own systems, SAP S/4HANA, SAP Business One, and SAP Business by Design. Now the question is, where does your token reside? And you always have the discussion about custodial wallets versus sub-custodial wallets. We believe one very attractive option for customers is to keep those tokens in self-custody. And this is why the digital currency hub comes with self-custodial wallets. And my colleague Darius will show you later how the solution works and how we have structured those self-custodial wallets. The nice thing with wallets, and you all know that, it's pretty much something like a bank account on the one hand, but a bank account can basically create myself and structure in a very friendly fashion. So then as an enterprise, I need to have just one bank account or two bank accounts. I can have multiple wallets, and I can use, for instance, the granularity of my business partner to make dedicated wallet on a per business partner basis, so that I can very well align the incoming payment to business partner without any kind of additional notifications, such as in German traditional benefits. So this is about the self-custodial wallet standard policy. It's about payments integration into your ERP system. So in the ideal case, you do not have a process break between the kind of traditional world of ERP, of traditional finance, and blockchain digital ledger technologies. You basically book your invoice as you would book any other invoice in the system. However, the system knows if you did reach an agreement with your business partner, to settle in a certain coin and a certain digital currency. And the ones of you who know a little bit about ERP, it's you put an invoice in your finance backbone. Then you run so-called payment runs. They basically pick up those invoices and create basically a transfer file in the old days of today's API called into the banking systems via PSD2 and the likes. And we basically take the very same process, but rather than just calling the banking API, we basically interface via our very own digital currency hub, know the wallet, sign the transaction, send it off to the blockchain for verification. And basically by that is something like a critical thing to do with the business partners. Instantaneously with literally any fee or hardly any fee, except for the kind of validation fee that we have in the blockchain networks. And if you remember the first chart I was showing, if you go for a network such as Polygon, you're in the range of subcents. So very fast, very cheap and very efficient. On top of that comes, as through the kind of more granular wallet structure, you very well know who is paying you for what. And by that, you have 100% accurate reconciliation in the ERP backbone against your accounts receivable. Also, a key value proposition of digital currency. It's not only about being fast and being cheap, but also having kind of 100% accurate and streamlined financial processing process in the ERP system. And this is what's meant here with AR reconciliation. Then, of course, if you move into such a kind of new environment, like just I told you, and you all also know that if you have to pay those transaction fees, also called gas fees on the networks, which you typically need to pay in the native cryptocurrency. So you also need to manage at least a little bit of Ether, Matic, and whatever network you use. And this is also done with the digital currency. So we can also manage that, pay the account fee straight, the gas fee straight from there. Plus, we can also account for that. As you know, this is also not so tricky. Regulations are not entirely clear. Today, the assumption is that you can account it as intangible asset, while the stablecoins we view as cash equivalents. It's probably also up for debate, and we are curious to see how regulations evolve in that regard. So, accurate accounting, we prepare for taxation. We take care for whatever you as an enterprise need to report back to the authorities. And last but not least, we plan to integrate the digital currency in their own rights into the cash management application of the treasurer. So by that, a USDC, a EURC, a Euro is basically having the same rights from the treasury perspective as a true fiat currency, and by that comes in very handy. Now, on top of the chart, you see crypto exchanges. And that's basically kind of fiat like, because if you run a self-custodial wallets of one of the matter of the argument, also the custodial wallet, you need to, of course, tie it back into the real world, into the fiat world. You need to be able, what we call, to on-ramp and off-ramp into the fiat world. And this is what's meant here by crypto exchange. So we do it, of course, also integrate into the crypto exchange. So with the digital currency hub, in summary, we provide customers an option to really straight from the ERP system pay with digital currencies. Focus today is stable coins. That's better understood in the way how you account for it. It's the more solid means of settlement on the one end, enjoying all the benefits of blockchain technology such as instant payments, cheap payments, being transparent, and also having the ability to swap from one token to another token by these exchanges on the one end. Last, what's very unique to our solution, that's tight integration into your enterprise resource planning system. And by that, making digital currencies just another quote-unquote currency, which you can handle as easy as any fiat currency. And with that, I would like to hand over to my colleague Darius, who will take you through the solution. We will give you a brief kind of run through. We cannot do a live demo because we're not allowed from the committee here to get network access. If you would like to see a live demo, reach out to Darius and myself, and we are very happy to show a live demo to you. With that, over to you, Darius.
Thank you, Bernhard. So I'm Darius. Hi. So actually, what you see here on the screen is the SAP product. It's not like these old SAP systems and screens you may all have in your minds. So this is how state-of-the-art SAP product looks nowadays. We have the Italian word for flower of it. It's called Fiori. And as you can see here, you can see actually here a standalone version, which when you have an integrated solution with an ERP, you don't need to access that page because you just work in the ERP, make a payment, receive a payment, you will never, or most likely not need to go on that platform. But there is, of course, this platform available for a standalone purpose, or if you want to do some, let's say, analytics or checkings whatsoever. And you can see here, it's as easy as online banking. So we have an overview of the accounts. You can see how much US dollar coins, USDC you have on the balance. You can also see the native currency, Ether, where you have to pay the gas fee. You can also see functions like making a payment, requesting a payment. You have an option to see and manage your business partners. And when I click on make payment, it's really like online banking. So you have at first to select a business partner here, which will then, of course, have also the address, the wallet address stored, combined with the business partner. So no manual typing, no error can occur. It's let's say saved in the master data. And then, of course, if you then type in the US dollar amount of the invoice and then the US dollar coin amount will be, of course, as it's 1-to-1, the code is easy, will be put there. And then, actually, in this case, we do make a payment, so we will maybe then will pay a supplier, for instance, here, and have then here the wallet address of the supplier, and then we click create. And then when we click on create, you can then see that there's the outgoing payment, which is in process to Premier Foods. You can see the amount of USDC, also the equivalent amount in US dollar, and the transaction date. And what you can then also do, while in these 2-3 minutes, it's we planned a live demo. And it's really working, but we have now all the screenshots. So in these 2-3 minutes, what we want to do next is also to show you the other side, so that when you send out an invoice, that you then request the payment. And here it's a similar way, like online banking. So you will choose a business partner, type in the amount, and also some reference, AVIS information, and the due date, and click on create. And it works in a similar way. What you need to know, what we will show also later, as we are working digitally, it's easy also to assign for every business partner a dedicated wallet address. So when a business partner then pays you, you can reconcile the open invoice easily and close the open invoice, because the money you received was on a specific wallet, which you only have created for the specific business partner. So every business partner will get their own pay-to address. And yeah, this is the final screen. I want to show you actually when we paid our supplier here, Premium Foods, that then this is like 3 minutes after the initial date. You can see it's completed. We consider completed if 6 validators have validated in the chain the transaction. Okay, so this is the solution architecture. I will go back behind my laptop because I can't read it. It's getting old. So what you can see here is if you go from left to right, and there's also a thin line between the very left part and the middle part. And why is that? So on the very left side is, or let's talk about colors first. Blue is what SAP is providing, and gray is what comes from outside SAP. And on the very left side, you can see that we will give our customers a self-custody store where they can then put their private keys for their wallets. It's under the custody of the customer. It's not on SAP premises, not in the SAP cloud. It belongs to the customer. Then the middle part, and not the SAP cloud is not fully true. The customer can also put the asset custody on our SAP cloud, but under his own, let's say, under his own name and under his own account. It's not an SAP global account. In the middle part, if you go bottom up, you can see that there's the digital asset management core. This is actually really the centerpiece of the solution, where you have the inventory of crypto assets, where the crypto transactions happens, where the wallets are, where the transaction log is, where you do further things like incoming, outgoing payments, and so on. And we have extensibility always in mind from the first day on, we're working on this project since 2 years. It was always crucial to us that the partners of us can also fulfill the customer requirements, add another coin, add a different taxation, add another localization legal requirement to it. So that's why we also added up some modular approach on top. You can see those 4 rectangles above, where we have like an accounting module where we will start with the, let's say, well-known accounting standards like IFRS, US GAAP, HGB in Germany, and we'll open up for, of course, as I just mentioned, for partners to add further accounting standards. We have on top of it, we have the payment execution module to request payments, make payments, do the reconciliation. So every business partner gets their own wallet. When we receive on this wallet money, we can directly match it with an open invoice because we know that this open invoice belongs to this wallet and can then close it. And main use case, of course, is here cross-border payments. On the right side, there is the treasury module where you can then, of course, see the balance of your wallets. And below is the taxation and statutory reporting module. As you know, SAP is since 1972, so a bit more than 50 years on the out on the field. And one of the big topics SAP always is doing is ERP, is doing taxation, is fulfilling the legal requirements, the localized requirements of the countries. And this is what we want to do also here to bring, let's say, digital money or crypto to the enterprise to make it enterprise ready, enterprise grade software for digital money. And the last, let's say, column on the right, you can see then the ERP integration. As Bernard mentioned, we have our flagship S/4HANA there, but also the ERP for small and medium enterprises like SAP Business One. And there's an analytics module as well, of course, to see some nice graphics and run reports over your balance and so on. And on the right side, of course, we also are looking on non-SAP ERP systems to integrate with, as the solution will be also available standalone, and partners can then build own integrations into other solutions, which not always must be an ERP, by the way. It can be also a travel expense and HR system. They all may need to handle crypto in a way. If we talk again about ERP, what you can see, what we have done here is on the left side is the typical ERP process for now receivables, where there's a business partner, and there you can see that there's a link to the digital currency app, as there's the business partner mirrored, but every business partner will get an own wallet generated. So this is then, let's say, the pay to address, and then if then a sales order is sent to the customer or let's say the lead, and they are then, let's say, willing to pay, and when it comes to the billing, then a request payment is triggered in the digital currency hub, and when there is then incoming payment, the account statement will be sent back to the ERP, and then the bank statement is created and it's in the books. And this is what it's all about. You can do cross-border payments without our solution, but you don't have it in the books. And that's the problem, what you face in the enterprise. Yeah? You can use MetaMask, you can use PayPal if you like to pay your business partner globally. But if you're a small German company and you have a business in Chile, you need to get your money back to Germany. And if you do it via the banks, you lose 50 euros. And if you do it with PayPal, and you do it a lot, you have a lot of trouble later with the auditor. Yeah. So, and payables, this is the other way around. When you pay your suppliers, then here also you have a business partner, you have a fixed pay to wallet address on the master data of the business partner. And when you then go from a purchase order to a supplier invoice and the outgoing payment needs to be made, then the digital currency hub will then trigger the make payment process. There will be then an outgoing payment to the wallet address of the business partner, of the supplier, and the network fee will also be paid via the used blockchain, or let's say, for example, Ethereum mainnet, so we use Ether. And then account statement is created and it goes back to the ERP as a bank statement. Yeah, Bernard, I think this goes now back to you.
Right, so let me take it over from here, Darius. So cross-border payments, this is the use case customers told us is spot on where you have a gain point. However, that's probably just the start and not the end. So it would be also very curious to hear from you, to hear from the community, what other use cases you see for enterprise grade payments with digital money. What we could imagine is basically machine-to-machine payments. We have that also in the model. It's also about conditional payments, so that basically you have partial payments, if the ship arrives at the harbor, things like that. Yeah. The good thing is the ERP knows anyway most of the information, so you just can use that information anyway in the ERP system. Then it's about salary payments, so I'm paying your employees, especially in high inflation countries, with stablecoin. And most notably, I saw a very recent article on the adoption of USDC in Argentina, where people really kind of go into USDC instead of the local currency to protect themselves from it. And last but not least, if you talk about another business process, it's about expensive reimbursement. Now, where do we stand as an industry? Let's start bottom up. The infrastructure is there, be that blockchain, or be that even what we are doing today, the integration to the ERP. So I think we can pick somehow the infrastructure piece. So technology is there. Then comes accessibility of digital money. In fact, this today is, according to observation, the biggest pain point that not only we, but the entire industry. If I look with my mid-sized clients, how many signatures do you think a mid-sized enterprise needs in order to get a single USDC? How many? Any guesses here in the room? No one wants to guess?
Don't be shy, any number. 4, I can see 4, 6.
I mean, and there's always the answers. It depends a little bit on your group structure. But in fact, every managing director needs to sign. And if you're kind of having a hierarchical ownership, even the owner of the parent company or managing directors need to sign. And imagine mid-market enterprise that just wants to do a bit of cross-border payments. Will they go through that pain? Probably not. So if I now could go to my traditional bank and say, hey, give me Euro E, give me USDC, give me Euro C, and I can basically get as easy as making a bank transfer, basically kind of retrieving money from my bank account into the wallet, then I guess we have solved as a community the hardest problem for mass adoption of digital currencies. This won't take place. We can have the greatest technology, we have the greatest integration. I doubt that anyone will use it. So for me, it's all about accessibility. And last but not least, it's about awareness. And I think this is why I'm so grateful about the Digital Euro Association and all what you guys are doing, educating the market about the benefits of digital currency. So that's the starting point. It's hard, but for me, relatively speaking, easy to do. The real hard nut to crack for all of us together is making digital money accessible. If you drive that forward, we provide the infrastructure, then I think the future of digital money is blossom. So that, thanks a lot from our side. Hope you enjoyed the discussion. We are still here. I'd like to give you a demo, and if you have questions, probably have time for one question.
One or two questions, if there is some questions in the room. From that side.
I would have one question on your experience with clients that you talk to and pitch this solution already to. It's not a product yet, but still, I suppose you're talking to clients. What the perception also is on the transparency of the underlying settlement rates, right? I mean, if you're going on a public blockchain, then at least in theory, everybody could see what this large corporate is doing if you assign the address to an individual.
You said large corporates. We currently the mid-market, we talk to small companies and large corporates. For them, this is probably not being mentioned as an issue. They probably don't understand. So that's one. Probably they don't know what it would be. I mean, in a way, it's not that clear name, it's pseudonym. Yes, of course, he is generally units and can trace things back and can get an understanding. Plus, it's typically only a fraction of this situation. Right? It was fundamental 10, 20, 30%. And at least to the customers we talked so far, that was not an issue.
Yes, I have just one question. You are providing just the technical infrastructure, or do you provide also the financial services?
No, we just provide software.
And you're working with some bank or some service providers with licenses?
Absolutely. I mean, what I said is we have a self-custodial wallet and we can fill it with whatever token we want. As long as it's ERC20, it's basically from out the box. If not, we would have done it.
The last question from there.
Sure. Feedback, I mean, what we did run test drive, we did run pilot, and we are just basically in the process of finalizing whether we launch the product. Feedback so far was overwhelmingly positive with regards to the concept, the approach that we are taking, and see SAP taking really a kind of a first mover into the world of marrying digital currencies and at scale.
Yes, and we also started with the UX first approach, right? So we had the designers first to draft it and then the developers making it happen. So we always work first with the UX team first and then get it developed, not the other way around.
The promising solution at the moment, and I think that was very hands-on. It was going away from it and looking for different options where people wanting to visit public-private peace, for example. It seems to be a big bottleneck from mass adoption, and I'm curious of the experience.
I mean, we can take it offline. What technically we need a private key, but as a user, you won't see the private key. So it's extracted away from the user.
Okay, thank you. Time is up. Maybe you can continue the discussion after presentation. For many of you joined recently, so I don't know if you heard that there is a slight change to the agenda. Dr. Karahan that is not coming today, and she wouldn't be able to join us virtually. So we'll be switching the agenda, and we'll have our next speaker, Shakinto Porter, will be presenting the sand dollar to us. And after that, we have our usual short break for the next block of presentations. So let me prepare the slides again. And I think you can hear completely set up.
Yes.
And I think this works as well.
Okay.
Yeah, stage is yours.
Okay, good.
And ping me when you need the
The videos, yeah, no problem. Right. So good afternoon, everyone. My name is Shakinto Porter. I work at the Central Bank of the Bahamas in our financial market infrastructure unit. My unit deals with the payment systems we have at the bank, like RTGS, ACH, SWIFT, our CSD, and of course, our central bank digital currency, the sand dollar. So here's a brief look at the agenda that we'll go through today. First, we'll look at the overview of the sand dollar, which will cover, the introduction, why we thought it was necessary, how it was issued, and why we think it would be a good alternative to cash in the Bahamas. We'll also look at the implementation of the sand dollar. We'll take a look at the last 5 years, the stages that we went through with design, stakeholder consultation, pilots, etc. Afterwards, we'll also look at the financial landscape in the Bahamas and why we thought a CBDC would be a good fit. And then we'll take a look at objectives, designs, adoption initiatives, and engagements by the Central Bank of the Bahamas. I also have some videos
to show everyone, some of our marketing collateral and just different tactics we use to get persons involved using the CBDC back home. And finally, we'll take a look at some graphs, how the sand dollar is trending in circulation, individual wallets, merchant wallets, and finally, we'll take a look at some new updates that we have coming out next month in March. Okay, so what is the sand dollar? Well, like cash, it's issued by the Central Bank of the Bahamas. It is our national retail central bank digital currency, and it's simply the digital version of the Bahamian dollar. As I said, it's issued by the Central Bank of the Bahamas through our authorized financial institutions, or AFIs. And as an alternative to cash, it offers a greater flexibility and accessibility for residents or visitors that want to participate in financial services via a mobile phone application. So when we say an alternative to cash, I'll just give you some examples. So in the Bahamas, we are a very cash-based society. Tourism is our #1 industry in the Bahamas. And for example, taxi drivers, most taxi drivers in the Bahamas, if not all, only accept cash as a form of payment. So with the introduction of sand dollars, we've seen more taxi drivers downloading their wallets, and they can accept the CBDC as a form of payment. Now, why is this beneficial? Well, it helps the taxi drivers, go to the banks and, show a proof or source of revenue. And it just gives them the opportunity to get microloans from the banks. It's much easier than, just accepting cash and say, hey, okay, I made $5,000 last month. Well, the bank wants some record of that. Well, now that they're using sand dollars, they have this record in their phone that they can export and send to the bank as, a source of revenue. So the sand dollar, for example, it just makes it, a bit easier when applying for things, for loans, for, in this case, taxi drivers. Let's just take a look at the implementation timeline. So first came the design. This was in 2017, 2018. We created a very comprehensive, risk-driven, anti-money laundering compliant ecosystem. It has instant transaction capabilities, and settlement takes place 24/7, 365 in a secure environment. So the sand dollar is also designed with the use of libraries and APIs that allow our financial institutions to customize and issue third-party wallets to their clients. So in 2018, we began stakeholder consultation, and this phase of the implementation ensured that internal stakeholders at the bank, like internal audit, information security, information technology, legal, they all had an opportunity to review the technology before we launched it in 2020. So in 2019, we had this internal pilot where all central bank staff members would use and pay for their food at the cafeteria in sand dollars. So it was a huge success. Previously, you would have to purchase tickets with physical money, but now you can just top up your wallet and use your sand dollar wallet in the cafeteria to buy food. So that began in 2019 and it still continues to this day. And then in 2020, early in 2020, we had a pre-launch on one of our family islands called Exuma. Exuma is a very hot spot for tourists. That's where you can swim with pigs. Some of you may have seen it. And we launched the pilot in Exuma. It was a great success. And then in October 2020, in the midst of COVID, we launched the sand dollar wallet to the public. So with the launch of the wallet, there were some updates and introductions to new legislations in the Bahamas to legalize the digital currency as a legal tender. We made updates to the Central Bank of the Bahamas Act, the Payment System Amendment Bill. We also saw the introduction of the Bahamian dollar digital currency regulation. So why did we think it was a good idea to use a CBDC in the Bahamas? Well, let's take a look at the financial landscape. And first and foremost, the Bahamas is an archipelago of over 700 islands and keys. And we noticed over, between 2014 and 2018, that the number of commercial banks on those outer islands reduced and banks were leaving those islands because they didn't find it profitable to operate on some of the smaller islands where the population might not be so large. So that created a growing population of unbanked and underbanked individuals with reduced access to basic financial services and limited access to cashless transactions. So many of those individuals who lived on those outer islands found it very difficult to get access to cash. Some persons would have to drive 2 to 3 hours to find the nearest ATM. So this is something that the bank wanted to start to think of a solution for, and CBDC did just that. So with this in mind, the sand dollar was designed with the following objectives. First and foremost, to achieve greater financial inclusion, cost effectiveness, and to provide greater access to financial services across all islands of the Bahamas. Next, we wanted to increase the efficiency of the Bahamian payment systems through more secure transactions and faster settlement speed. We also wanted to provide non-discriminatory access to payment systems without regard for age, immigration, or residency status. So anyone in the Bahamas can get a sand dollar wallet. The wallets have different tiers. Tier 1 wallet, you don't need any KYC documentation for. You can just download the app, sign up with one of our financial institutions, and start using it. That's a tier 1 wallet. There's limits. John spoke about it earlier in his presentation. The limit has a holding limit of $500 and a monthly spending limit of $1,500. The tier 2 wallet, you will need some KYC documentation for, but that wallet has a limit of $8,000 and a monthly spending limit of $10,000. And then the tier 3 wallet, which is really for businesses, that can hold up to $1 million and has no monthly transactional limit. So we wanted to provide this non-discriminatory access, which is why we have this tier 1 wallet that anyone, even visitors, can download and use. And finally, we wanted to strengthen our national defenses against money laundering, counterfeiting, and other illicit ends by reducing the ill effects of cash usage. So here's just a look at the overall design of the sand dollar system. So you'll see different modules here, the administrative module. This is really what our information technology team and information security team use to monitor the health of the system. Then you have the treasury module, which is where operators, central bank operators would, issue cash to different financial institutions. You have the insight module. This is where we get all of our data from to see how the sand dollar is moving throughout the different islands of the Bahamas. You have onboarder, which is how our financial institutions can onboard new clients, and so on and so forth. But if you look towards the right-hand side of this graph, you'll also see that the sand dollar is integrated with some of our legacy infrastructure. This includes our RTGS and our ACH. Cross-border, not yet, but just focus on the top two. So this is how persons can integrate their sand dollar wallet with their bank account. So if you have a bank account and you want to link it to your wallet, you can, and RTGS and ACH makes this possible. So you do need a tier 2 wallet to integrate to RTGS and ACH. And this is how persons can top up their wallet from their bank account. You can go into your mobile banking app. You can send money to your sand dollar wallet. You just enter your wallet account number and it goes to your wallet. Or if you want to send money from if you want to send CBDCs from your wallet to your bank account, you can do that as well. That goes to the ACH. You just link your bank account, you enter the amount that you want to transfer, you hit transfer, and in about an hour, it'll be on your bank account. So this is just a quick overlook of the design. And here's a look at the ecosystem, the current ecosystem of CBDC distribution in the Bahamas. So of course, the Central Bank of the Bahamas mints and issues the currency to our financial institutions. These can be PSPs, MTBs, commercial banks. Those institutions, they handle the CBDC onboarding. They onboard, members of the public, merchants. They handle the KYC and AML checks. They're the ones that issue you your tier 2 or tier 3 wallets. And this information is stored. And then once the person is onboarded with their wallets, they can, buy goods and services or do P2P transfers. Merchants can also do payrolls. So we've been seeing an increase in the number of merchants that use the sand dollar for payrolls. It's quite a good thing to see in the Bahamas. We see more and more merchants every week becoming onboarded to the infrastructure and using it to do payrolls. So it's good to see, adoption is increasing. So when we get, let's say 5-10 years from now, we expect to see a reshaped financial landscape in the Bahamas. So by providing access to these digital wallets, some of which, of course, do not require the traditional banking infrastructure, which makes it easier for anyone to participate in these electronic transactions, which of course take place in real time. It will reduce wait times and help with liquidity needs on the capital island and all the family islands. You don't need to ship cash to and from your island or to your business. You can just use the CBDC. And because of its nature, the sand dollar will bypass many of the intermediaries, which results in lower transaction costs for merchants. And traceable transactions will help to deter money laundering, fraud, and thus increasing the trust in the Bahamian financial system. And these 4 objectives on the screen, they are the building blocks for the new financial landscape in the Bahamas. And then in addition to the ones listed, we can also see a wider effect of the sand dollar, which is easier financial innovation, where companies and fintechs will create new financial tools and products that can emerge for the sand dollar. So we've seen it now with some of our PSPs, where they are using APIs to link to their custodial wallets. They have, for example, budgetary apps, auto payments, reports, spending activities that they're using to innovate with the sand dollar. We also see a stronger digital infrastructure as the nation continues to invest heavily in information and cybersecurity. And there will also be a decreased reliance on traditional banking services. And just for example, why this is important, the Bahamas is a nation that's prone to hurricanes. So we normally have 1 major hurricane a year. And in the event of a disaster, traditional infrastructure goes down. You have a backup. You can use the sand dollar to send money to your friends and families on other islands if you aren't able to get to a bank or send the money through your mobile banking app. So let's take a look at adoption. So on screen, we see 4 key challenges that we've had with getting persons to use the sand dollar. The first and foremost is how to top up. Well, I now have this wallet. How do I get money on the wallet? So there was a lot of public uncertainty around, okay, I have my wallet now. How do I get funds on it? So we've had a lot of educational campaigns over the last year just to teach persons how to top up. And there are numerous ways that you can top up your wallet. First and foremost, if you don't have a bank account, we have kiosks all around the island, by our financial institutions. You can go to the kiosk, you can give it cash, and it will load funds onto your wallet. You can also visit any merchant that uses the sand dollar. If you give them cash, they can top up your wallet for you. Of course, if you have a bank account, you can transfer funds from your bank account to your wallet. Or if you have, if you know someone nearby who has a sand dollar wallet, you can give them cash. You can top up your wallet. So there are a number of ways that you can, get funds onto your wallet, and that's something that we wanted to make clear in the Bahamas. Inconsistent experiences. So we have a number of wallet providers in the Bahamas with their own proprietary apps integrated with the sand dollar. So a lot of persons, are confused with, a certain payment provider's app. Okay, well, this app does this app does that. Well, what we try to explain is one clear message. Once you have the sand dollar, you can use it with any app, no matter who your financial institution is. Once you have the CBDC, it works with all apps, no matter which app you have. We've also seen slow adoption by merchants. So the number of merchants is steady increasing now, but earlier of last year, persons were like, okay, well, I have my sand dollars now, where can I spend it? So the bank is really working with financial institutions, PSPs, MTBs, to increase the number of merchants that accept sand dollar. And one of the final adoption challenges we saw was a lack of infrastructure on some of our family islands, where those areas that you want to target, but those unbanked and underbanked individuals, they may not have the best infrastructure on those islands in terms of, internet or just, good internet usage. So we're also looking at an offline solution for our CBDC. This is just a quick snapshot of what the bank was engaged in for 2023. And you'll notice that there were a lot of different events here on this screen. You had literacy fairs where we assisted public education efforts and the activation of sand dollar wallets and sand dollar incentives. So a lot of these events that we tend to, we give away incentives. So if you come, you try and sign up for a wallet, we give you a chance to win a prize, maybe $5 to $50. We'll top up your wallet for you. We also sponsor various fairs like the Red Cross Fair. We visit the family islands. We have events on the family islands. We go there. People can come down, they can learn about what the sand dollar is and how it'll benefit them. So as you can see, it's just a lot of engagements. The bank has an adoption unit now where this unit is specifically focused on going out to the public and doing these events, doing rebates and different campaigns. And I think I have a video, so a couple of videos just to show you.
A series of videos.
Yeah.
This is a playlist, so just play them like this.
Is the audio?
Should be there. It is. Let's give it some power. And go back.
For every shape-up, after-school activity, unplanned home repair, and other day-to-day spending, there's sand dollar. Sand dollar is a convenient way to send and receive money instantly. Sand dollar is easy to use. It's safe and secure. Just like physical cash, sand dollar is issued by the Central Bank of the Bahamas. And best of all, there are no fees for individuals to send or receive funds. Download a sand dollar enabled digital wallet and enjoy the benefits of digital Bahamian dollar. Spend it locally. Transfer it to and from the local bank account, or convert it to and from physical cash. Learn more at www.sanddollar.ds.
Hi, my name is Amanda Ferguson with the.
So yeah, that first video you watched is just something that we have circling on social media, just to give people some information on what it is, how they can use it, how they can top up. And this video here that you will see is a video from one of our merchants who recently signed up at one of the events, and she just speaks about her experience with the sand dollar.
My name is Amanda Ferguson with the Candle Company. We sell candles, we sell bath bombs, and this is our 10th year in business. We're actually a sand dollar newbie. We signed up for sand dollar for the Jollification Festival. The experience has been seamless. At first, new stuff, right? We don't know what to expect. With sand dollar, we were very pleased to know that we were offered another way for customers to make payments that were digital. And this year is very important to us because we don't like handling cash, the physical cash anymore. It's safer that way to be able to just have that on a digital platform. At the end of the day, I have my totals, I know what I've made, I don't have to count the cash, I don't have to worry about the security of walking to my car with cash on me. I can tell you that, I won't go back to the old way for sure. I'd much rather the transaction being on my phone. It's simple, it's instantaneous, and my customers have actually loved it.
Right, in this last video that you'll see, it's an example of one of our rebate campaigns. So it's just some promotional activity for a rebate campaign that we had in December. Right, so that was a rebate campaign. If you went to one of the malls and you bought some goods and you showed us your receipt or the audit trail in your wallet, we would refund you, a certain amount of money to your wallet. So those are just some of the ways, we communicate and try to spread the word of Sand Dollar. So we use television, radio, social media, and of course, face-to-face. So here's a look at the total value of Sand Dollars in circulation. So as of this month, we have about 2.1 million Sand Dollars in circulation. This is still a very low number. This number represents maybe less than 0.5% of the total value in circulation. Of course, notes being the highest and coins being right after. But as you can see, there's a steady increase of Sand Dollars in circulation. But also what we want to see is the velocity of Sand Dollars increasing. So we want to see Sand Dollars moving from wallet to wallet, from business to business, not just the number of Sand Dollars increasing in circulation. Here's a look at the number of individual wallets. So right now we get this information from our authorized financial institutions. There are about 120 Sand Dollar wallets out there. And to put this into perspective, the Bahamas is a nation that has a population of a little over 400,000. So we're a very small country. So 120,000 wallets, it's a pretty good number. And merchants, we have, I think, yes, 1,800, right? So this is where we want to see the growth. We want to see more merchants in the Bahamas accepting and using Sand Dollars. So finally, look at what's coming next. We call it Wallet 2.0. And what Wallet 2.0 will bring for Sand Dollar users and persons who want to use the CBDC is self-activation. So I spoke about the Tier 1 wallet earlier. Currently, if you want to use the Sand Dollar wallet, you download it from the App Store. And once you open up the app, it lists all of our financial institutions. You select one, it gives you their contact information, you email them, and they say, okay, do you want a Tier 1 wallet? If so, they just send you an activation code. If you want a Tier 2 wallet, you send them your KYC. Well, with self-activation, it removes the initial contact for the AFI. So you download the wallet, and you select your authorized financial institution, and you get an activation code for your wallet. So there's no need to reach out to the AFI for that activation code. You get it automatically. Now, obviously, this self-activation can only be done with Tier 1 wallets because of the KYC requirements needed for Tier 2 wallets. So self-activation is really meant for tourists or persons who may just want to test out the CBDC and see how it works. They can get a Tier 1 wallet, self-activate it, and start using it. There's also the introduction of self-help and security questions to assist you with reactivating your wallet on a new device. So let's say you buy a new phone. Currently, you have to reach out to your AFI and say, hey, I just got this new device. Can you please help me setting up my wallet on my new device? But with the introduction of self-help, like I said, it'll introduce these security questions. You answer the questions, and you can reactivate your wallet on your new device. Of course, you have your same balance, your same transaction history and everything. Wallet 2.0 will also bring with it branding opportunities. AFIs will be able to really brand their custodial wallets or with their company's color schemes and logos. And we hope that this will make it easier to use, and the self-activation, self-help will also increase with adoption and give merchants more reasons to use the Sand Dollar wallet. So I am out of time, but are there any questions?
Yeah. I have a couple of questions. First, what is the underlying infrastructure? Is it everything proprietary, or you're using some open source technology? What's the size?
Yeah, so it's a DLT.
Also repeat the question for the online audience so they can hear it.
Sorry, so the question was, what's the underlying infrastructure of the Sand Dollar environment? So it's a DLT-based, permission-based infrastructure. It's proprietary, and then we give our AFIs access to the infrastructure, and they can create their custodial wallets and use our infrastructure for their custodial wallets.
Okay, another question regarding the means of payment. So as we see from videos, the main process is by scanning QR code. Is there any other like send money to
Yes.
a phone number? Or
Right. So the question was, what are the ways to send sand dollars? So like you saw, there are two ways. Of course, the QR code, but there's also you can send sand dollars via alias. So when you open up your app and you want to send money, you can actually just type in the name of the person. So for example, if you create a sand dollar wallet called, let's just say Steve, right? You say, okay, I want to send Steve at sanddollars.bs, and you send that money and he'll receive it.
Yeah. Have there been any attempts to kind of do public policy push to drive adoption, such as, discounted government services, tax bill, anything like that?
Right. So we're actually re-engaging with the government this year to see what we can do to get more government offices accepting sand dollars. So in 2021, we had everything wrapped up with the government. The government was ready to launch and start accepting at all of their offices, but then the government changed and we had to start over. So now we're discussing things with this government to try and see what incentives we can use.
You would get it in as a payment method effectively in the government environment.
Yes, exactly.
When you first spoke about Bahamas and the eagerness to accept more cash than digital money, I thought, oh, Bahamas and Germany are more closer to each other, apart from being so far away by kilometers. But you feel you're in the home of cash.
Yes.
Germany, very cash history.
Yes.
Cash funded. So, and even people fear the digital euro as a means of control by big government. Was it the same? And how did you bring down these fears?
Right. So the question is, how do we reduce fears of CBDC usage in the Bahamas? And you're right. So the Bahamas is very cash intensive. That's what everyone wants to use, cash. So one of the first things we had to do actually with the introduction of the sand dollar was a lot of educational campaigns. So persons thought that the CBDC was another form of cryptocurrency. So they tried to stay away from it because there are negative stigmas, at least with the public, attached to cryptocurrencies in the Bahamas. We had FTX, they were based in the Bahamas. So after they went down, persons were, okay, we're not messing with anything digital. So the first thing we had to do was just clear the air on what the sand dollar is. And persons are now more open to it. Some persons are asking the question about privacy, but what we tell them is, okay, the financial institution that you sign up with, they have your information, not the central bank. The central bank can only see wallet A sending money to wallet B. We don't have names attached to those wallets. And really, it's no different than how wires are used now in the Bahamas. For example, across RTGS, the bank can actually see the information in RTGS. So really,
people who were skeptics, they just
yes.
pay cash.
Yeah, don't worry, we have that in the Bahamas as well. Yes, for sure. I think, one.
I mean, this was similar, but in return, privacy part of the $100, because I think this is the most discussed topic politically at the moment. So the question is, what privacy concept is?
Yeah, so I mean, it's just the same thing. We let the public know. So you won't, I think it was mentioned in one of the presentations earlier, anonymity. So you won't be anonymous, but you will have anonymity, right? Where the only person that can identify your transactions is your financial institution. Now, if you're flagged for something, then those financial institutions that are regulated by the central bank, they have an obligation to report that to us. And then that's where the investigation takes place. So once you're not doing anything illegal, you're fine.
One last one.
Okay, yeah, I think you said first.
Is there still a kind of
so it's in discussion. I don't know if we're going to launch this year, but we're really working towards getting an offline solution off the ground. We'll have to see how testing goes. And offline is, at least for us, it's something that we're very careful with because, of course, there's a lot of questions. You have to think about how long are you allowed to stay offline? How do you prevent, double booking and all sorts of things. So we're really taking our time with it because we want to get it right. No.
We're going to our break because we need to continue with other presentations, but feel free to continue the discussion during the break, so we can prepare. Thank you. So 10 minutes break, and then we continue with the Central Bank of Hungary. Well, diesmal wird's knapp.
How long do they have officially?
20 Präsentation.
Dann lass uns auf 18 oder 19, weil wir wissen, das ist wichtig, dass wir
Ja.
werden.
Okay, ja.
19.
Ja. Streaming is back. And this is back. And this works. No? Now it works. So, everyone, we're back from the break. So we'll continue with our next block on CBDCs. Please take a seat. Our next speaker is Anika Zombati from the Hungarian Central Bank, and she'll give us some insights on what they're doing with CBDCs. So please. Yeah, but we are like close on time, but we'll give you 30 seconds to come down. Okay. If you have ongoing discussions, you can do it outside because we need to continue. Okay? Okay, stage is yours. Guys, we're starting the presentations. If you're discussing, please go outside.
Okay, so welcome everyone here present. I made the nice selection of cookies outside, and also those who are following the conference online. I'm Anika Zombati, Chief Digital Officer of MNB, the Central Bank of Hungary, and in the next couple of minutes, I will guide you through our own CBDC approach and results achieved so far. So more and more countries are seriously experimenting with the CBDC, and only a couple of them, like Bahamas, have already launched a fully fledged CBDC, and we ambition to be in the forefront of CBDC research and experimentation, and we started our journey with the publication of a comprehensive study book on all possible angles of CBDC issuance, where the chapter 4 on design framework is a work of me and my colleagues, and which we base on during our own pilots. And so we not only started with the conceptual framework, but the regular screening of the public opinion towards CBDCs. And what we learn is that the concept itself is very poorly known by our citizens. And of course, they imagine everyday life situations as a possible fields of interest, and what are the key motivating factors that can increase adoption is, of course, the pricing, and so it probably has to be free of charge, and also the risk characteristics that people would entrust the central bank and would require a risk-free product from the central bank. But up until now, we haven't identified any concrete market failure or a very specific policy objective that would drive us towards a large-scale general adoption of either wholesale or retail CBDC. But we endeavored to set up specific real-life pilot projects involving real users under the current EU regulatory framework that helps us collect very precious knowledge and build skills so that whenever the time arises, time to market can be shortened. So we are active in both the retail and the wholesale direction. and our first retail pilot was timed for the launch of our Money Museum, which is a very interactive, very digital place, and I recommend you to visit. But those who cannot visit can still download the mobile application that was created, and not only for the visitors themselves, but with a second functionality. We set up a specific feature. We became an NFT issuer, actually, where in exchange for filling quizzes in the field of numismatics and broader financial knowledge, we are providing NFTs to our users. These NFTs, of course, are issued on our private blockchain, and the NFTs can be stored, collected, exchanged, and usually we are...
Possible to ask questions?
No. And usually we are forming sets of 6 different NFTs that can be enrolled for a lottery, where we are providing physical coin sets to the lucky winners, and the ownership of these physical sets of coins can also be registered on the blockchain. So what we ambition here is to have a blockchain-based system directly on the central bank infrastructure, and that drives us towards the journey of possible broader usage of this technology. But what is our main retail CBDC project is called MMB Student Safe Application. Actually, it's as I said, it's a targeted approach. So when we were considering any use cases, we identified the digital financial inclusion of students in the age of 8 to 14, and of course their parents and altogether the family, so that we can offer a first digital wallet to these children. And in this way, we can serve a dedicated user group. And on the other hand, we can experiment with CBDC in a controlled environment. And also it can bring us to a really long process when end-to-end user-facing mobile payment solution had to be implemented by the central bank itself. So the design was helped by our specific design framework, where as usual, we are starting from the pain points and go through all these steps and decide on technology really at the very end of the process. And we have picked a very traditional centralized system, but we have several novelties, like we have a two-level tiered account system for basic account and full functionality account with different holding limits. And what is also novel, that it is an end-to-end central bank system, meaning that we are operating the KYC AML framework and also the deal with the customer complaints. So as a whole, what we are providing to our users is a fully fledged, very modern mobile bank functionality with payments, with top-up, with QR code payments via the instant payment system, with savings possibilities, and also with the possibility of conditional payments. So this is quite regular. But what we have as an additional functionality, it's an incentive scheme. It's actually a gamification part where we also run a quiz system in the field of financial education, sustainability, and digitalization. And in return for solving the quizzes, our young customers gain student coins, what can be collected. And also the student coins can be earned from the parents because the central bank distributes every month a small amount of student coins to the parents who can either transform it or set some conditions like small task like walking the dog or cleaning the room. And so all these interaction can go via the application. And finally, the student coins can be redeemed in one of the main e-commerce companies called eMAG. So the students can buy real object presents for themselves. And overall, we have a modular architecture. So more or less the upper part describes this gamification part, and the lower part describes the payment wallet functionality, which is novel from the legal point of view, that we have identified that what we can do under the current legal system, that the central bank is an e-money issuer. So we have a commercial bank partner who is running our escrow account. Right now we are in connection with one bank, but it can be extended. Also, we have technology partners who allow us with the VPOS functionality, the top up with a debit card, and also with the payment based on the QR code payment method. And this modular system helps us to experiment with more technologies, more partners, and of course, learn about the functionality as it is. What I would like to highlight here, that all the project and the possible future functionalities will be based on design thinking. So first we started to ideate about what can we provide to our target group together with the UX agency, and came up with an MVP in a little bit more than half a year. Then we started, of course, with friends and family at the central bank. And last May, we got the full launch. And since then, we collect all the experiences and refine all the functionalities or the processes so that we can really become, I wouldn't say competitive, but equally attractive to our user base. What we have learned so far is that it's really a challenge to have a 7/24 system at the central bank, because beforehand only the homepage was constantly available, and we not only had to provide all these fancy features, but we had to install all the internal processes, bylaws, comply with very, very specific high-level cybersecurity requirements set by the central bank colleagues. And as we see, we can move forward with adding new functionalities based on our market review. First and foremost, we started engaging with vendors in the form of structured interviews to review the market, whether they can help us in setting the real offline functionalities, so peer-to-peer offline what is achievable right now from the vendors. We are also considering to set up SDK so that everyday banking mobile application can be can also embrace our solution. And since we consider that the key of the adoption lies at the merchants, we also consider implementing virtual cards into the system so that the payment could be as smooth as today with other solutions. Just a couple of words about what we are doing in the first area. We are actively engaging with several BIS Innovation Network centers. So the London Center, Singapore and Hong Kong Center for the moment. With the London Center, we participated in the Rosalind Tech Sprint together with the blockchain experts of the Budapest Technology University. So the aim of the Tech Sprint was to ideate about possible use cases which are, let's say, real added value use cases and which promote competition. And here, as a single central bank, we got into the semifinals with 2 solutions and into the final demo section with 1 solution, which was a DLT-based energy bill supporting scheme, where we visioned a solution where the state level support, which were actually prevalent in more than 20 countries in Europe in the past year, so that the state could promote the energy bill payment in a targeted real-time way, where energy saving incentives are also embedded into the scheme. The other was about car lease supporting scheme, where e-car leasing was promoted via a long-term, again, specific state level system. So these are conceptual ideas. These were demoed during the demo session, but we are not yet in real discussions with the government authorities. And where we have been also very active are the wholesale pilot projects. We became observers together with Banque de France in Project Dunbar. And recently we became observers at Project Enbridge, where we had access, of course, the Enbridge sandbox and provided valuable comments. And we are actively seeking deeper integration during the next pilot phase. So this is what I wanted to tell you today. Maybe a short time for one question or two.
But the gentleman back there, you had a question. We're starting the Q&A.
No, the question, I just had one question there regarding the 260 or what it was, cell phones that you charged. How many transactions or how many user interactions does that mention? In the slide somewhere in the middle, you said that with the energy consumption there for the blockchain, you could charge 260 or so cell phones.
So we already issued 600,000 NFTs with users in the range of 5 to 10,000.
Okay, so it's like 600,000 NFTs equivalent to the energy to charge 260 cell phones.
Yes, roughly.
That's nice to have a gut feeling for that.
Okay.
One last question.
So if no question, then I offer you that in the next break, the first 5 applicants who happen to have a Wise account and is willing to set up a Hungarian forint account can get Hungarian CBDC from me within 2 seconds with the Central Bank of Hungary.
So let's move to the next presentation, which will be on the digital renminbi and cross-border CBDCs by Professor Heng Wang from the Singapore Management University. Yeah, stage is yours. Just to let's make the presentation is there.
Okay, just
this.
Okay.
This screen cuts off sometimes. Don't worry. It's only that screen.
Okay, look at this one.
will-
Okay,
Yeah.
great.
Okay.
Shall I
Stage is
start?
yours. Yeah, you can start.
Okay, so hello everyone. Thank you for the opportunity to speaking at this great event. So what I would like to talk today is about the ECNY cross-border CBDC as well as the future. So three questions. One is that what's China's approach to CBDC? Two, how to understand China's approach? And then using dispute settlements as one case to see what are the issues we are facing. And so here, firstly, we saw ECNY or digital yuan. They actually is intermediate, CBDC platform. See here, PBOC, People's Bank of China, we issue that through, operating institutions, mainly largely Chinese states owned banks, as well as two internet banks, which are affiliated with Ali and WeChat. And then you have the tier 2.5, because tier 2, you see here, actually dealing with open ECNY wallets, disseminate, and also KYC and others. And then you have tier 2.5, which are other banks, and which are smaller banks. For example, what they will do, they will collaborate with tier 2. They probably will like to get a quote, those kind of things. They get tier 2.0, and then they work together with tier 2.0 institution to provide services. So that's tier 2.5. And of course, end users, including businesses like McDonald's and others, they will actually in the ecosystem, they're being used in different cases. So for example, like paying tax, paying for transportation, and also for issuing salaries and so on and so forth. And besides domestic use of CBDC, which is both retail, but also exploring wholesale one, like e-commerce, where China is trying to pilot, using ECNY for e-commerce, to overseas. They also, actively participated in Enbridge, as really been made by previous 10-minute speaker about Project Enbridge. And, so we see that actual pilots, the project which involves, China, PBOC, Hong Kong, MA, UAE, as well as the Thai central bank, and also with observers, mentioned earlier. They have 5 different types. You see here domestic one, cross-border payments, and the cross-border FX, PVP. And what they have done is that they have actually have different central banks, which link with the Enbridge steering committee as an administrator. And their relationship includes platform terms. So you see here is a platform terms that engage between administrator and the central banks who participate in that, and also the external terms where this represent commercial banks. They will have a contract, another engagement with other, commercial banks and others. So these are kind of the new platform has been built, using Enbridge ledger, and here you see that they have efforts to do more real value transactions and to explore, the use cases. And they also have some, insurance and redemption, some of them done by off-bridge, you see here. And also you have part of them done by on-bridge. Happy to discuss more if you have any question in that regard. So that's also one of the efforts China is doing in that regard. And also China is being exploring the possible use of ECNY in Hong Kong, and also more recently to see whether this can work in Singapore, And we see that if you look in China's CBDC approach, obviously the role of the state is very important. The cryptocurrency, in China's case, China banned the crypto. Actually, that's a different if you compare China with other many other countries. And secondly, centralization, because PBOC obviously is a leading role in that regard. And secondly, cross-border use, that is wholesale, but also potentially retail. You think about in Hong Kong, you use that for hotel and other uses, using existing and new mechanisms and multi-level efforts. So, for example, Ambridge, but also the joint venture between SWIFT and PBOC. So that's different platforms being used. And certainly taking advantage of the technology network, because China has been a leader in terms of cashless payments. Nowadays in China, it's hard to use cash. So they try to utilize those advantages, first mover and also network. And certainly proactively see international governments. So China proposed the principles, cross-border CBDCs, and also first to add digital currency related content to ISO 222, suggests the G20 to have the CBDC standards and principles. So that's an area where China has maybe arguably has a comparative advantage because of the first mover, but also states driven by the state to explore that. And although this is the area, for example, US is not really a leading figure in that regard because that don't really work for the US dollar's position. And also, if you look into and this is also an area where we see that China can take advantage because they don't have really treaty or those hard rules in that regard. If you compare with trade law as one example, and of course, feel free to scan the QR code, which is linked to the article, which I explained that on different pages. So one possible understanding of that was China's selective reshaping international monetary or financial system because it's building kind of new infrastructure. And also in the past, you probably will go through intermediary currency like US dollar, but now through CBDC, you could have a direct transaction among different currencies. And also new infrastructure, because that is only about hardware. You think about the CBDC data servers, hosts like in terminals or wallets, and also technical standards, IP, and also that is international ISO standards and so on and so forth. And also, secondly, that's shaping future CBDC frameworks, and certainly also other impacts, on whether if you have a major economy issue CBDC, and what that means for other countries in terms of the currency position in the digital age. And secondly, for influencing factor quickly, I think that's for China's approach, importantly, perception and conception. Perception means that how China perceives traditional knowledge, or fintech, because you don't have CBDC start from scratch. Then also learn from fintech, cashless payments, And secondly, also conception. China have to tell their story. You have your leaders, so you have to develop your program, and so on and so forth. And also, they also have a sort of the type of complementarity. So here means that, particularly regarding, China's preferences, for example, China has a trade power, but not necessarily a monetary or financial power. So CBDC can be a way to, improve China's role in that regard, and also to promote finance and trade. One of the arguments for China is that, to drive down the costs for that, for transaction. And certainly external dynamics may help to prepare if US sanction on China, you have those kind of arguably another pathway. And also certainly elements include legitimacy. So China engaged in international governance and others helps to develop international legitimacy. See, we work with international, standards. We work with SWIFT and others. Yeah. And finally, we also have institutional capacity, which is very important because you have to rely on that to develop. What are the implications? Quick one that, of course, the economic ones. So how do you bear the cost? So that's a big question, right? How to make that sustainable? You have a research and development, and you don't really, in China's case, you don't really charge commission. So where's the money come from? So that's one thing. And secondly, what are the implications for the markets? So you have CBDC with or without expiry date. And what does it mean for competition? Foreign international banks, for example, what's their role in that regard? And certainly the macro financial implications, spillover effects. And what does it mean for other countries? And also the confidence, the trust is very important. In terms of political economy, so that regards the role of the market and the state. How do you define the role in that regard? So for example, in the ecosystem, what are the division of labor? And also how to deal with international relations, geoeconomics. For legal perspectives, there are many issues to be asked: resilience, adaptability for data leakage, or those kind of issues, international coordination, for example, limit on CBDC use. Not every country on the same page, and also sustainable development, e-waste For example, CBDC is another layer of financial system, e-waste, energy consumption regarding data usage, and so on and so forth. And looking to the future, there are many issues. I just want to explore these few settlements, to show that lawyers have some role in that regard. I mean, so for example, very open issue that for cross-border CBDCs, it's very challenging. You cross-border, you have a different currency, you also have a different system, you have a different platform, you have a different ledgers. So that's a huge, highly complex, which is a moving target. Two, for actors, different from traditional ones, now you have multiple platforms, right? You rely on cross-border CBDC platforms. It's more complex. Some of them most operate by central banks, but theoretically, in one pilot project by BIS, it can also be a private entity. And thirdly, vendors, vendor risk, vendor management, and also actors beyond the platform, including individuals, if we look into cross-border retail use. In terms of relationships, what is on-bridge or off-bridge? So off-bridge relationships, like the compliant checks, platform administration, and the central bank with commercial bank, with CBDC holders. What happens if it's, I remember when I spoke at the IMF, they have a question that pop up in, when you have discussed CBDCs, that what happens if the intermediaries is insolvent? Who will be responsible for that? Will it be the central banks, or will that be other actors? And also many issues, technology issue, glitch, cybersecurity, cyber attack, issue like regulation, how do you deal with different approaches to privacy, and issue like, platform legal documents, all those like smart contracts, data breach, and also have an issue about CBDC usage. Think of different stages that may happen in terms of the exchange, redemption, distribution, even cancellation. Yeah, so there's many issues in that regard. And also another question will be, if you have a large-scale cyber attack, for example, do you have a CBDC exit plan? Do you have a plan B, right? So that's one thing you have to think of, because that's a fiat currency. And also there are many disputes, possibilities, state-to-state one, a non-state one, thinking about if different states have different directions to the platform, CBDC platform, how do you handle that? And also, what about failed transactions? How about the fraud, compliance, cyber attack, compensation, and also how to deal with those kind of differences? And do we need to rely on existing dispute settlement systems like arbitration and others, or you need new ones, which is being tricky because central banks may not necessarily want to deal with that, subject to a third party. To conclude here, before I want to have more discussion, is that, well, you see here on the left side in the past, probably international financial system, US dollars arguably in the center. And CBDC means that we have more fragmentation. You have new parallel system coming, and which is different. And then we see highly complexities, and also a key issue here to conclude is the trust. Trust will be a major issue. So how do we build the trust on the track of CBDC? Is that based on institutions with institution environment, or you build that upon process, reputation, experience, or you build that upon characteristics, or in terms of groups? CBDC may, if you have ethical CBDC, a group of CBD central banks do a good job, maybe that be possible, or system-based form of trust. So a lot of questions regarding how to build the trust. So here are some of the research if you're interested in those issues. Here's a QR code and lead to that. So I would like to leave more time for discussion in case there's any question. Yeah, but let me know. Yeah, thank you.
Any questions?
Yes, I have one question. China has found a lot of experiments of testing already. So the reason why China is not go forward, issuing more Chinese yuan. So my question was, we have waited a long time. China has started very early. Yes. So that's one question.
Why?
Why?
So, yeah. I think there's so many reasons for that. Because actually in China, users already have WeChat and Alipay.
Yes.
So you have pass vendors, shift from one platform to another, so that's one thing. And secondly, that I think that's supposed to be an issue about you also have another for end user, sorry, for merchants. But also like, post-like terminal, so what are the incentive for them to use that? And also you don't have commission for those CBDC news. And thirdly, also, I think that's also be an issue about user trust by the end users, because of the, if you pay by salaries, through CBDCs, and how they perceive that also be very important. And also, you pilots, a lot of them we buy red packets, you distribute that. But what happens if you don't distribute that? And whether consumers will still use that? Yeah, so there's a lot of effort need to be done in that regard. Yeah, and also apply another issues here.
Yeah, I checked this topic last time, I think a year ago, and back then the adaptation of the CBDC of the ECNY in China was not that high. How is it today?
Yeah, I think that's probably, I don't have the real-time figure because it's not easy to access that, but I think that's still be long, it's not still be challenging for the reasons explained just now. And also a new issue like, they have a fake, app, or even withdraw cash from ATM machine by taking advantage of the anonymous feature of some small wallets.
Do you have like a ballpark figure for the amount of transactions or the share of transactions that's done in CBDCs in China today?
Not sure about that. The information itself is being it's being. Thank you.
One more question on the ECNY as well. So I think the general problem of any new payment system, including CBDCs, is overcoming the habit of those that already pay with certain ways, right? For example, Alipay, WeChat Pay. I wouldn't understand, and this is my first question, I don't know what your view is, I wouldn't understand I wouldn't see a reason for switching to a new system if everything works as it is, right? And if there are no additional features, and I think WeChat Pay and Alipay, I don't use it, but as far as I understand it, it has a lot of features, right? Which presumably the ECNY doesn't have. That's my first one. I would have a second.
Yeah, thank you. I think the first one is that actually, for users, why do I want to shift? And two is that, you don't charge commission. And then you have also incentivization issue that you have to overcome. And thirdly, in the long term, you have, hardware, software developments. There's also costs issue and how to make that sustainable use cases. Yeah, even for cross-border use that, with a substantial amount of transaction can fund that. That's also another issue.
And the second one is on the cross-border again. I joined a little bit late, so you started when I came in, the mGrid project was already on the slides. Is that really the strategic way how the ECNY should be used for cross-border purposes, or does the PBOC also have their own strategy? Because this is a joint project, right? And this is more about, let's say, wholesale settlement between different banks. So is that the strategic way how they want to put the CNH and CNY in use for cross-border?
Yeah. So firstly, I cannot speak for PBOC for obvious reasons. But here we see that what happened was China exploring both retail and wholesale cross-border use. So mention, for example, in Hong Kong's case, or even for Singapore, try the possibilities in Singapore. That's for retail, not for wholesale. Enbridge itself is on wholesale usage. But here again, we also have many open issues. Like how do you govern those kind of new systems, and how do you have the use cases to make that sustainable? And at the end of the day, the trust is very important. Like data, data flow, how you share the data among different central banks, and so on and so forth. Yeah.
Another question for me. Are merchants, so again to China, are merchants in China mandated by law to accept these CBDC?
Yeah, because it's been a fiat currency. So in China, they're planning to change the updating or modifying the central banking law, and it's fiat currency, so the merchants are.
So not as of now, but it's planned. I think I remember I read an article where it said that the POS payment providers usually don't offer the ECNY because they don't make a commission on out of it. And because there's no profit for them, they just want to include the ECNY in their POS payment.
Yeah. So here's also a technical issue whether they have those kind of equipment or those facilities. So that's an issue. But in principle, it's a fiat currency which is supposed to be accepted. So that's also one aspect of that.
Regarding the distribution of the data, Joan, he said that Alipay, they have to distribute the data, Joan,
Yeah.
or they are forced to do so, or it's like an optional.
You mean whether WeChat and Alipay?
Yes.
Yeah. Not sure about the arrangement behind it because of the, but what happened in practice that you can use that through WeChat and Alipay embedded into the app. Yeah, so that's they're also involved in the ECNY process. Yeah.
So they integrated the data, Joan, as another means of payment through Alipay.
Yeah.
Maybe one last question.
How China's dual currency policy is facilitating or the adoption of the dual currency is somehow connected to CBDC.
I mean, which one is connected to CBDC?
The Chinese dual currency, they have two currencies, right?
CY and CNH.
That's a good question. They have a limited public information about how they handle that. And also that's you reminds me of the broader issue, even includes the foreign exchange control. You know, how do you, if you have a cross-border use of say CBDCs and what, how do you manage that? You know, right? And also compliance issues. And also for Anchorage project, the report also highlights there also an issue, which is the challenges about foreign exchange liquidity. So who provides the liquidity? And also you have a different regulatory system for Thai central bank. They have their own rules, and different countries have different rules how to accommodate that. They're probably more challenging than the technology itself. Because there are many roadblocks that are important to address.
I hope that answered your question. Yeah.
And I think we've approached the end of our time because we are going into a short break, 10 minutes. And then we have our last block of presentations. So unfortunately, it's the last break, end of the sessions, but yeah. Thank you. We'll see you later. Hallo, Valentin, wir sind eigentlich bereit. Einfach die Slides sind da.
This is the presenter, right?
Ja.
Okay.
Sonst lass das so stehen. Wenn wir im Livestream sind, wird das jetzt auf dumm Aufpassen mit dem, mit dem Tisch aufpassen.
Ja, ich werde die nicht anfassen, ich werde das über den Präsenter machen.
Mikrofon ist da. Wenn ihr da vorne geht und die Leute online können das nicht hören, also
Verstehe, wir bleiben besser hier.
Okay. Gerät bleiben. Okay. We're slowly approaching our last block of presentations, and we ask you to take a seat and prepare. This is the last block, but that's not the end of the conference. We still have more panels in Audimax. So after we finish here, you can go over there and check out the Audimax or the main stage, as we say. This is our final block on the next-gen financial systems. And today we have two gentlemen, Peter Landgraf and Christian Fries from DZ Bank, and they will be presenting you with the decentralized settlement systems. Gentlemen, the stage is yours. 20 minutes. Yeah, you can start.
Hello, everyone. Good afternoon. My name is Peter Landgraf, working at Capital Market Strategy Department, and I will present together with Christian Fries, who is head of model development and risk control department of the Z Bank, and also professor for financial mathematics at LMU Munich. And today we would like to present two protocols with regard to decentralized settlement, one for securities, one for OTC derivatives. And we will present this at a very functional, detailed level. And the reason why we are doing this is because we are maybe all here today, because we are realizing that capital markets are shifting to a higher functional form of intercompany collaboration and transfers. And this is why software will basically the center of all this. And the core element of broader adoption of this functional form of interaction is the existence of software standards. And these standards need to be robust, transparent, and best case to be developed in a collaborative and open source code-based way. So let me start. I will present, let's have a look at the agenda. Smart derivative contract. This is a protocol for digital derivatives. Christian will present a decentralized delivery versus payment for securities. And in the third section, we will touch the added value of open standards again, which I just emphasized here in the beginning. Smart derivative contract is a protocol removing counterparty credit risk. So it's not about only digitizing some existing process. You can see this as a new form of a capital markets-based product. So you can trade this anyway you've already done so far with other OTC derivatives. But this product has an important distinction. It also a feature, it comes totally as software. So motivation coming from where we are coming from, what was the motivation to design such a product? OTC derivatives come with complex processes and frictions. And the original intentions, if you look at the plain interest rate swap, they are intended to manage market risk. But now look at the frictions and the processes. I mean, this is a bilateral contract. You may be trade with your counterpart over 30 years, and this is subject to counterparty credit risk. And to mitigate this risk, several processes are put in place, also from regulatory incentive over the last 15 years. So we have a collateral process to mitigate counterparty credit risk, but this introduces new friction and new risks. So we have settlement risk because there's no payment netting between the original derivative cash flow and the collateral cash flows. We do have different valuation models to determine the collateral amount at the end of the day, which we need to exchange. So we have a dispute process. And we have actually the counterparty credit risk, counterparty risk of collateral, because there might be a time when the counterparty fails to provide the collateral. So there's an over-collateralization of collateral. So we have the initial margin process in place. And this faces institutions to a large amount of liquidity risk because if markets change, these collateral amounts may change too. So, and looking at the interest rate swap, the regulator did exactly what we, maybe if we are all about DLT and decentralization, he did the opposite way. He centralized the post-trade processing. Yeah, he said, okay, there's a clearing obligation to process your derivative over a central institution, namely the CCP. But the CCP introduces a new intermediary into the entire system and is subject to default risk. And this is why we have a default resolution process in place, which we are all obligated to see that the CCP is not subject to default. So look at this, red, right? A lot of processes and frictions and risks, yeah? So would you like to digitize the existing world? I think you wouldn't do that. The better way is to just start from scratch. And this is what we did to rethink the post-trade life cycle for such a derivative and say, okay, you know what, just try to implement a smart contract which maps an OTC derivative into a digitized form. To do that, we need to have predefined product elements in place which ensure algorithmic processing. So fully Turing complete, fully determinism. This is the way we need to do it. And now at DZ Bank, we did this experiment twice. So we traded this product as a new derivative together with Bayerische Landesbank in 2021, 2022 with Union Investment as a new form of the derivative with, as I said in the beginning, being a software which was basically maintained and developed together on a collaborative base and being maintained on a distributed ledger based infrastructure. Design elements. We have a digital trade format developed, so no contract risk anymore because the contract elements are digitized and stored immutably on chain. We have a valuation model, part of the OTC contract, so actually code is part of the law, so no disputes anymore when determine the settlement amount. We have no collateral process in place because settle to market feature replaces it by saying we have the exposure of the derivative net present value to be settled at each day such that the derivative shows no exposure. We have no counterparty credit risk, and because, as we all know, smart contracts can act as digital escrows, and we put a pre-funding mechanism in place which guarantees the settlement each day. And finally, if a counterparty is subject to default, then there's a pre-termination feature in place at which pre-agreed terms the contract can be ended without any closeout risk. So to show you the mechanics shortly, you see we have the trade internalization. Both counterparties need to pre-fund. Yeah, this is basically relates to the smart contract world where we pre-fund some amounts to a smart contract or digital escrow. This gets checked by the software. Both counterparties trade this derivative, yeah, according to all the rules which apply. And then the digital process, post-trade process starts. We have the valuation being maybe conducted twice or several times intraday. We can do this intraday only. We will determine the settlement amount, which is guaranteed at maximum to the margin buffer, which is pre-funded. This gets checked, and if everything is fine, the next settlement cycle starts. If not, then we have the trade termination procedure in place, which is actually up to the implementation of the software or the software version of how both counterparties agree on, which then applies in terms of termination. So, surprisingly for us, PwC did a white paper in October 2023, actually pointing to the same features this product actually has. So it's not about digitizing processes or something. It reduces funding costs, operational costs. It even has might have an impact on the capital side. So capital requirements may lower because this product shows no no counterparty risk anymore. So looking at the wholesale euro, the nice thing about this product, it's payment only, so no asset chain is needed. Yeah, we can run this as a full decentralized application. You can imagine like an algorithmic clearing protocol being installed, often suitable payment chain, for example, and then it would unlock its full potential because it could directly interact with default-free digital central bank money.
The current implementation is being done with a SEPA network, but this might be not scale enough. But for the last two proof of concept which we traded, we did use this trigger. But surely looking at the exploration phase of the digital euro now, we could deploy, as I said, this SDC product on a central bank payment chain with counterparties operating a node. And for that, the SDC code has been published. This is fully open source. You can download it. It's published as an ESC 6123 and could be easily reused on this infrastructure. So this was a part of how to decentralize the post-trade processing for derivative. And now I would like to hand over to Christian, who will show you the same for the security side.
So thank you. My name is Christian Fries. And the smart derivative contract is actually about getting rid of superfluous processes, thus reducing costs, and also getting rid of intermediaries. So no collateral process, no collateral management unit. And another aspect where this is the case is DVP, delivery versus payment. Maybe you all know this. I have a small overview. And the SDC is also a kind of delivery versus payment that removes intermediaries. So what's the delivery? What's the payment? Well, the delivery is that you have an asset that has a claim that has, due to a market move, generates a claim for a margin call. And the payment is the settlement of this margin call is cash. The nice feature about the SDC is that you can do this on a single blockchain infrastructure because there's just booking of cash. The claim is created by the valuation model. If you have delivery versus payment, that you have a payment in cash for an asset, you maybe have two infrastructures, two blockchains. One is managing the asset, one is managing the payments, and you have to create a secure link. The delivery versus payment, the guy comes with the money and would like to collect the asset, and you have to ensure that everything is atomic in a certain sense. So there is an idea hash link contract that has similarities to this, and Banca d'Italia wrote a paper that improves this idea. And let's have a look at these two ideas, and then let's have a look at what we propose. So we propose an even leaner, just a small improvement, leaner way of doing this that fully removes intermediaries. So this is the hash time lock contract. So you see, time is running vertically down. So these are kinds of swim lanes. You see the participants, the buyer, the seller, the DLT managing the asset. Controlling the asset, and then some API to the payment system. The first step is that the seller generates some secret key that later allows to obtain the asset if the buyer knows this secret key. So this is called here, in this context, it's called pre-image. And from this pre-image, only a hash is generated. And this hash is then passed to the DLT, to the asset chain. So the asset chain can check, is anyone presenting the secret to me? Okay, then he gets the asset. Also note that smart contracts have the nice feature that they know who is presenting something to them. So the function knows the caller. So he can check if the buyer is coming to him, and he can check if the buyer knows the secret pre-image. So this is then locking the asset. So that's the first step. And you see there in this locking here, there's a transfer from the seller to the smart contract. So the smart contract is locking the asset. This is locking the asset. Then the second step is creating the payment. So the buyer is moving his money to the smart contract on the payment chain by talking to this API. And this API can then verify that this has happened, and the seller can check this, so he gets an okay. So this is this okay here. And then the seller tells the payment chain, okay, the money is locked. Here is the pre-image. So this is the atomic operation. The money is moved to the seller. The pre-image, the secret key is moved to the buyer. So this is actually here the atomic step that ensures the delivery is paid. And then the buyer can collect the asset. So in the title you see can be compromised here. Yeah? So there are small issues with this protocol. Yeah? So we want protocols without intermediaries. First one is there is a kind of timeout here. So the seller needs to collect the fund, the money, and he's actually free to choose when he does this. Yeah? So there's some kind of option. And then the buyer needs to collect the asset within a certain time. Because if he does not collect the asset goes back to the seller. And you can think of a kind of denial of service attack on the buyer. Yeah? So just prevent that the buyer collects the asset, then the seller has the money and the asset flows back to the seller. Okay, so the improvement is, so you have a trade-off, longer timeout increases safety but decreases efficiency. The improvement is to get rid of this timeout. And this was here proposed by Banca d'Italia. And what they do is actually you now have two secrets. One secret is the one where the buyer can collect the asset. The other secret is where the seller can collect the asset. So these two secrets are now handled by some kind of API. Yeah? So there has to be a central service that manages these secret keys. Okay, going a bit quicker, the API then manages access to the payment system and ensures that the payment has been made in the correct way, and then it distributes the corresponding secret key, either to the buyer if everything was okay, or to the seller if it was not okay, and the seller has the right to reclaim the asset. The issue here is that we have some central API that needs to maintain state. In nerd speak, maintaining state means that the API has to remember something about this transaction. And you also see that buyer and seller talk to this API. So this is not decentralized. This is maybe a problem. What we propose is slightly different, quite similar. So we have seller, buyer, and then we have two smart contracts. One smart contract on the asset chain, other smart contract on the payment chain. And the first thing you should observe is that buyer and seller only talk to the smart contracts. So this is very nice. No API involved. Let's quickly go through this. The encryption of these secret keys is done by the buyer and the seller. So the seller encrypts the secret that is later used by the buyer to claim the asset if it was successful. And the buyer is creating the secret key that can be used by the seller to reclaim the asset if something has gone wrong. So these keys are then encrypted and passed to the asset chain and payment chain. So here you see they store the keys. So the chains can verify that the correct secret has been presented. And then comes just a single, very small transaction. So first note that the guys only talk to the DLT. And the single transaction is that if the payment is successful, the buyer gets the secret to claim the asset. If it is unsuccessful, the seller gets the secret to reclaim the asset. And this is done by the DLT just talking to a single stateless oracle that decrypts the key conditional to success or failure. So the nice thing is that this is completely stateless. This payment system does not need to know anything about the transaction. Okay, this is our proposal, and the idea is, again, like in the SDC, to remove intermediaries. We have a white paper, and we also propose this as a standard to the ERC 7573. Let's conclude with a small remark on open standards. So we are two nerds, maybe from the bank, and sometimes we hear, okay, what's the product you like to sell? So actually, we don't like to sell any product. This is completely open source. The mission is that we would like to propose a standard that removes frictions in the banks that do not require any additional intermediary. So the benefit is just by removing costs. So if you think of distributed ledger technology, this is enabling full disintermediation. We have distributed data storage, distributed code execution, distributed representation of digital claims. Yeah. But then there is the absurd thing that you have some software infrastructure provider providing this software. Yeah, so what's the point now? Yeah, so now I have a new software that uses this distributed thing, but actually it's not distributed. So we would like to have a joint development of open source based financial protocols that enables us to speak to each other, yeah, like in the internet or email. Yeah, I mean, you just install an email client and you can talk to another email client from another company because all these protocols are completely defined. Maybe we could expect to establish a work group format, you know, that drives this development of common standards. So we are proposing here 2 standards, one for derivatives and one for delivery versus payment for assets. Yeah, and if you like our ideas, please contact us.
One question, 2 questions from the audience.
First question is, I guess the seller and the buyer are solving the conditions that trigger the settlement offline, right? So it's a yes or no, right? It's a, if the settlement were met, then the settlement is triggered, and then there's an exchange of keys. But there is no, the conditions are not solved by the contract, right? The contracts are not connected to oracles or any other source of information that triggers the settlement, right?
Yeah, the contracts just check if they have been presented the correct keys, and then this enables the next step. And the crucial thing is that the smart contract on, say, for example, the payment chain has the ability to decrypt a given key. Decrypt, for example, with a secret key of the payment operator, you know, of the central bank or whatever, decrypt conditional to success or failure. Yeah, so this is
okay, but all this happens after the resolution of these conditions have happened offline, right? And then the buyer and the seller decide to provide these payments, right?
No, the idea is that there is a payment chain where the buyer and the seller have an account, and the payment is operated on this payment chain, like a digital currency. So the payment smart contract on the payment chain has access to the accounts of the buyer and seller and can move the money, like a central bank digital currency.
So I understood from the beginning of the presentation that the settlement would depend on certain market conditions.
Are you referring to the smart derivative contract?
Yes.
This is payment only, right? So
this is payment.
It's kind of an algorithm. Imagine it like a algorithmic payment schedule. You install the contract. Let's say a central bank is putting a DLT infrastructure in place. Let's call it payment chain, whatever. You install this contract there. The contract directly interacts with, for example, the target 2 system. Just it determines the settlement value at the end of the day, sends the instruction out, directly transferred to the central bank payment system, transferred, and the settlement starts from beginning. Yeah. So this is even easier because you just have derivative cash flows. This is just cash settlement. So there's no asset chain needed. In the securities case, you will need to find a very good interaction and robust interaction between 2 chains.
Unfortunately, our time is up, but please follow the discussion maybe later because we have our next speaker upcoming. Is Mr. Mayholm here around? Here. Perfect. Just a second. So next speaker, Lasse Blom, who will give you insights on the Norwegian Central Bank digital currency. The stage is yours. That screen cuts off a little bit, but don't worry, it's only that screen.
55 or something?
The screen gets, 50, sometimes it works, sometimes it doesn't. The microphone is here for the online audience, so make sure you be around. And you can start.
Okay, thank you. Hello,
gentlemen.
Hello. Okay, I go. Thank you. I'm gonna go through what we did in Sandbox in Innovation Central Bank, phase 4. I'm gonna do it a little bit technical. I'm gonna focus on the technical side. Do you have a clicker?
Somebody took it. It worked.
So my background is actually I started a number of fintech companies. I sold them one by one after 10 years. So what we did in Innovation Central Bank, a little bit are followed by what I have back as a background. I also worked for a number of Nordic banks that have the bank feeling when it comes to CBDC. And I worked for the central bank as a consultant, coordinating the CBDC projects in Norway for 1.5 years. Then I was employed for half a year, and I left the central bank January 1st this year. So I'm going to go through what we did. I also written a number of best selling book in Norway. So the central bank has been a number of phases. Phase 1, 2, and 3, starting in 2016, was analytical work, paperwork. Do we need a CBDC? How should it be? Should it be offline, online? What should the bank do? How should we manage the financial stability and so on? Then I was engaged in 2021 to also include testing of technology. Now they are doing phase 5, and phase 5 will end in 2025. I'm not a part of phase 5. So focus on phase 4. We spent 2 months in 2021 speaking to everyone that we couldn't find to have something to do with the CBDC and testing. Visa, MasterCard, RP, Recorda, Hyperledger, almost everyone that we could find. Then we spent 3 months to build the sandbox. I'm gonna come back to that. During that time, we also opened a dialogue with all Norwegian banks. We opened a dialogue with tax authority, pension payment authority, everyone that we think could be a stakeholder in the CBDC project. And then when we finished this sandbox, we started to build a use case inside of the sandbox. We also had a number of hackathons. We had 3 quite large hackathons. We also have hackathons, which means we had invited hundreds of people to say, what is it that we have today? What kind of troubles do we have today that the present banking system doesn't solve? Is there anything that we can use CBDC for that we cannot do today? So we can open up completely. And then we spend a few months to make the report. Everything is online, on the web, to Norges Bank. We choose Hyperledger Basel. We are very focused on open source. Almost everything we did during this testing was open source. We put it on GitHub. I come back to that. And one of the reasons was that we was in the phase that we didn't try to make anything to deploy in production. We only would like to learn. And using EVM-based technology was a perfect thing. We could find consultants in Norway, bank could do the same thing, tax authority could do the same thing. So it was a very good technology to test. Then we choose ERC20 token, more or less because it's a standard. We run 6 nodes in the central bank, meaning that we have 0 cost transaction, self-custodial wallet, similar to cash, 5 seconds between each block, block, and then we use a consensus mechanism called proof of authority. So for us, this was the perfect technology to test. Then we build it like a two-tier distribution model. So the central bank was the only one that could mint and burn. Corporate bank and private bank could distribute to the customer, and the customer could use it. So this is a retail CBDC. But we could also use it as a wholesale, as a bank can pay in between them. So we could use it for both. But for us was the focus retail. We also built a user interface and a wallet. We didn't spend too much time on the wallets. We just make it work. We are focused on what's behind the scene, not the scene. So we just left it like this. And then we had 3 quite large RFPs according to the Norwegian procurement regulation, the same as the European Union. We are not a part of the European Union, we are part of the European Economic Area. So we had 3, and then we first chose a small Norwegian fintech company. There was 5-6 persons there. Some of them in Norway, some of them in London, and one of them in Singapore, I think. And they built the sandbox for us. Again, open source. Then we had another one to build new user cases called Symphony, also a Norwegian fintech company. And then finally, when we started to use cross-border payment with this innovation hub, we did some more hands. And the ex-Norwegian Block Exchange, they also built the cross-border thing. And for us, it was very important. And the reason we could have three companies building in the same database and in the same code base is because we put it on GitHub. So we put everything on GitHub, first private, and then we put it public on GitHub. So that's very important for us. The first use case was helicopter money. How does it work when you pay thousands, 10,000s, millions of transactions? So we build it first, so we have a text file, very simple, with the addresses and amount. And then we had an API kind of functionality to distribute the transaction in a number of blocks, because we had only 100 transactions per block. That's the first use case we used. And then we would like to test the bridging or the swapping, because we think that's very important. We don't think that the future is one ledger or one technology. It might be one technology for Internet of Things, another for corporate, and so there will be a number of different technologies and ledgers. So we would like to test something, and we use the ERC20 token, the Norwegian Krona token, as a basic, and then we build a new ecosystem, special Norwegian Krona, different nodes, different everything. So we locked it on the NOK side, mint it on the special NOK side, and then it can circulate there. And then it will also sent back by burning it on the special NOK side and unlock it on the NOK side. And this was very important for us, because once we did this, then the lawyer said, what happened if you move Norwegian Krona to something that we are not in control of? Is it still a liability on the central bank? Is there a legal issue here? So by doing like this, we learn a lot. We also tested verified credential, digital identity. And we did it together with the Norwegian Digitalization Agency. They are also part of the European Digital Identity AIDAS too. So we did it, we had to build something for them, but then we did it. So if you have a wallet and you have CBDC in Norwegian Krona, then you can request a certificate from the agency. We put the certificate inside of the wallet, and then we reprogram the ERC20 contract. So the money simply do not accept to be held by someone without the certificate. This is very important. And the reason we could do this is because we have programmable money. Then we also tested interest rate. Not to say that Norwegian bank would like to high interest rate, but we was asked to test it. And we did a number of tries, and we ended up with the other model, the D5 model. They calculate interest rate every 1 second on the holding. I don't go through it. Again, we managed to do this because we have programmable money. We changed the code, the smart contract inside of the money to calculate the interest on itself. It was not the bank that calculated interest. It was not the central bank. It was the money calculate interest on itself. And you can use this money, this interest, the same second as you receive it. So it's completely changed the interest calculation. We also needed to go into AML and CTF. So we built a tracer monitor from the Norwegian krona ecosystem. It automatically put red flag on suspicious transaction. And if it does, then you need a double multi-signature. So you need either a compliance officer in the bank or someone else to double sign before it goes through. We also tested that it was possible to size illegal transaction or illegal fund after court order or something like that. Again, we could do it because we had programmable money. Anonym payment, we tested that as well. And we tested everything anonym or everything below, let's say 50 euro or 100 euro or something like that. But you can only do it twice a day, twice a week or something like that. So that's and that's one problem we had, since we had so much business logic inside of the money, inside of the token, we couldn't use zero knowledge proof. We needed to go further, and we ended up with self addresses, which is also quantum immune. Then we tested cap on CBDC. So the sender or the payer doesn't recognize. On the receiver side, it was split in smart contracts. So either what's below the threshold goes into the wallet, rest go into the bank account of the user. And then we have spent quite a lot of time with this innovation hub. I was the project manager from the Norwegian side on the icebreaker. This is cross-border retail CBDC. I think we was the first one to do so. And this is quite important because we in Norway use hyperledger Bezel, self-custody. Sweden used Corda, completely different. Custodial all the way through. And Israel used Quorum, JP Morgan, Ethereum based. So we have 3 very different technologies, very different ledgers, but we have to put it together. And we use something called Hub and Spoke, designed by BIS. I don't go into detail. I can't, but I still have 5 minutes left, so I don't go into detail. But what's important is that if I, as a Norwegian, go to Sweden, use my wallet, pay in Sweden, then in my wallet I have only Norwegian krona. The Swedish receives Swedish krona. And in between we have a bank. We call them foreign exchange provider, taking the currency risk and the liquidity in each currency. And we use something called the hashtag locked contract. So, and you was very kind to describe hashtag locked contract. So I won't do that. But very importantly, it was same currency, but multiple technology. And that's very important. And that means that we in Norway doesn't need to do the same as ECB, for example, if you don't like them. But I think Norway is going to follow what the European does. So, but this is what was very important. And we paid from one wallet to the next in less than 2 seconds, cross-border. That's very important. Then what happened next? We finished this phase 4 in last summer. I was there from summer as employed to Christmas to get it started, phase 5. Phase 5 will end in 2025. Then the central bank will make a report and a recommendation for the government of Norway. They are the ones to decide. And I guess if they decide, they can say no. But if they say yes, it won't be only yes, it will be yes, but it needs to be offline payment. It needs to be cash like the anonymity. It needs to be people without mobile telephone or PC or computer need also to be able to pay. So I guess they will say something about the what should be inside of the CBDC, and then maybe they will go for it, and then it's a big project to deploy in production. I mean, this is an elephant project. If you're working for a central bank and really see what's happened, and also discussing this with banks, the retailer, the tax authority, everyone that has to change the system, it's a big project. It's going to take another 3, 4, 5 years, I'm quite sure. Okay, that's basically what I was planning to say, and I have a few minutes left for questions.
I think between the design criteria for digital euro and knowledge account, there are some differences. For example, you said we have tested already programmable money, and it's not the case for digital euro. Or you have in the programmable money option gain some interests, but on the euro side, you don't want any interest at all in digital euro.
Yeah.
So at the end of 2025, after the 5th phase is over, and I assume that at the same time the preparation phase of the digital euro will be also over. Will there be any alignment between?
There's no way following what happened in Europe quite closely. So we are part of SEPA. We are planning to do the tips when it comes. So I will guess Norway gonna follow what European are doing quite tight. But I'm not sure, and this icebreaker shows that we don't need to when it comes to technology. We can do something completely different. And Norway is quite different from at least Germany and Greece and Spain and so on. We are cashless. I don't remember last time I used cash in Norway. I got 500 Norwegian kroner from my father in birthday present 5 years ago. I still have it. Maybe it's 10 years since last time I used the ATM in Norway. So we are very different from the rest of Europe. And we also have a digital identity. So I have call it bank IDs owned by all banks in Norway. With this bank ID, I can log on and open a bank account in a new bank, a completely new bank. I can file my tax files in the tax authority in my bank ID. I can request a search at the university or at the hospital with my bank ID. Everything I do digitally, I can do with bank ID.
This law such as the EU digital identity banks.
Yeah. So I think we are very focused on open source, but we also focus on standards. So if European design digital identity, it's stupid not to follow.
Yeah, so I see 3 issues in your proposal. First of all, it's a performance in terms of number of transactions. You know, the requirement is 10,000 transactions per second.
Yeah.
But with the hyperledger bezel, with the fastest configuration, with the lowest number of announcement report, which is BFT resistant, you can do only hundreds per second. So this is the biggest issue.
Yeah.
Not talking about the cross-border transaction between multiple such systems. Will be at least 4 times slower because atomic swap using HPLC and HPL need at least 4 transactions, but more likely it will be hundreds than both. So this is the second issue in terms of performance and anonymity and privacy. I guess by stealth addresses you mean just some randomly generated address, which doesn't have associated any verifiable credentials, right? Which is probably the only way how we can do it naively. And I think this might be not enough because there are techniques that can already map the IP address to the addresses on the blockchains and do the linkage of the network level adversary can do. So these three issues are existing there, and I think I'm not sure whether it can be implemented in practice, because mostly it was like very straightforward, nice solution. So these three issues need to be somehow improved. But then this, as for a proof of concept or MVP, it's nice work.
Yeah. So our focus was to learn, and we didn't mind number of transactions per second, or we didn't mind. We had a happy cost, so we didn't mind cyber security and all this kind of thing. We just try to learn what is possible. So and that goes also for the cross-border thing. So yeah. So we skipped everything that might be a problem.
One last question.
Okay,
gentlemen.
Thank you so much. My question goes similar to the direction of this pan-European aspect, because I have seen your slides, you have mentioned the EIDAS2, and also this verifiable credential, which is important the instance, so-called UDI framework, which is also public now. And according to my knowledge, so you to utilize this kind of wallet architecture, is they have created or financed even 4 consortium. One of them is called NoBit.
Yeah.
With the study country, etc. They are dedicated for pan-European payment use cases. And actually, exactly you have shown, or you have even done, matches also to the idea of this digital identity wallet to be an infrastructure capable within Europe, not only for the user, but also for Norway and Sweden, etc.
Yeah.
So actually, you have done a lot, but it sounds like you have discussed. Do you have connection to this European scheme, or do you also plan to do something similar or compatible with the European scheme? Or you have your own plan from the Norwegian Central Bank, maybe you have your own milestone, etc. You just want to test it, but you do not plan to be compatible. What's your strategy behind it?
No, we follow what they're doing in Europe for quite close. And today they are a part of SEPA, they're part of the European thinking. And that's also the reason that we tested the EIDAS2, this European ID thing. What happened in the future, I don't know. But for up to now, we are very focused on the European thing.
You also work with this open consortium together.
Yeah,
to
well,
unify the scheme.
that is right. I mean, we had this digital identity thing with Sweden, Finland, and Denmark, as you said. We also had something a few years ago for know your customer as a service. The bank come together and build a company that do the know your customer, and then the bank can attach to it and buy this as a service. But it was 2 years and then it stopped. So it's the Nordic thing is very important for us. That's right.
Okay.
Okay, thank you very much. Maybe we should donate some cash to you so you can have this ancient technology with you as well back home to Norway. Our last speaker will be joining us digitally, and that would be Rami Soliman. Rami, can you hear me?
I can, Florian. How are you?
Florian is the colleague who is streaming this, but my name is Valentin, and we actually exchange.
We did exchange emails. Yes. How are you? Good to meet you. Would you allow for screen sharing so I can share my presentation?
Yeah, actually, you're already in the room. Everybody's seeing you. So once you start the presentation, you can introduce yourself and just give start with the presentation. Let me check something.
Fantastic. Yep, I think it's working now. That's great. Well, before I start, I want to say thank you very, very much for the opportunity to speak. Welcome to everybody. I understand that this is the last session, so I believe I'm holding you from the after event drinks and networking. So I won't keep you too long, but and I want to keep it a little bit lighter, given that it's the last session of the day. But I found that Lasse's presentation was actually fascinating and led to a couple of things that lead nicely into this presentation, which is the innovation that is available with digital money in all of its forms, whether it's stable coins or whether it's tokenized deposits or whether it's CBDCs, retail or not, are actually phenomenal. But as you said, the elephant in the room is that CBDCs will take a long time, and there is a requirement for standards. There's a requirement for standardization, coordination between institutions at a supranational level and at a national level and at a commercial level before you get this kind of innovation. So I wanted to start with this paradoxical, oxymoronic title, innovation and stability, because I realized I was in the innovation room, but I'm talking about stable coins and where's the innovation in the stable coin? So I wanted to tell you a bit about how I reached this conclusion. And essentially, what are the contents here? I'm talking about the crypto ecosystem when I joined the market in 2022. I'll be talking about the crypto crash of 2022 that we all remember, the rationale for stability, and then the development of stablecoin standard, which is a standard setting organization for stablecoins. So this picture is meant to represent the innovation stability. So the stability of the suit with the innovation of the cape. So hopefully it heads in the right direction and keep things light. So I want to start with the situation in 2022. My history is TradFi, worked in banking at Citibank, FX prime brokerage, CFDs with IG. So I had a long career in financial services. I worked for GMO Group, which was one of the largest FX brokers in the world on the retail side. I moved to their stablecoin issuing business, GMO Trust. We're a New York DFS regulated trust company, and we issue two stablecoins, a dollar-based stablecoin and a yen-based stablecoin. But I joined this business in March 2022. So at that time, it was a very interesting and turbulent year, as we remember. What happened? In May, Terra Luna collapsed, which was a stablecoin. So I'm there to start the stablecoin business, and an algorithmic stablecoin lost $40 billion in 3 days. Then a crypto bank, Celsius, failed in June, as we know. Then there was the Three Arrows Capital collapse, which had consequences in June. Voyager then filed for bankruptcy. Voyager was then bought by FTX. Then FTX filed for bankruptcy. And then BlockFi also filed in the same year. So what are we saying here? There was innovation, and there was certainly innovation in the product set. There was innovation in the products, and the innovation, but there wasn't stability. The innovation had led to a run on products. It had led to bad governance. It had led to fraud, and it had led to criminal activity in one case. So, remember this guy. This was the innovative poster child, Sam Bankman-Fried, for responsible crypto and regulatory progression. He was the one who was sitting in front of Congress, if you remember, in 2022, saying that he could help regulate the traditional financial markets because his systems were quicker, he was better. But actually, behind the facade, it was just fraud. And he's now a criminal, and he's serving jail time, as we know. So this was the environment that I entered into 2022. At the same time, we saw that the digital asset space was maturing very, very quickly. So formal structures that have had time to mature in TradFi had to be formed at pace, and they were not there. I came from FX. We have the ACI, which is a very established FX committee. We have the FXPB. They together formed and wrote the FX Global Code of Conduct. In the retail broking, there are associations, various associations and consortiums of participants and industry actors that help to regulate structure as industry bodies, to share best practice, to share thought leadership, to share these things. I saw that stablecoin issuers did not have this. It was quite strange. So it seemed disorderly. In the digital money conversation, and it's interesting that Lasse's previous talk was very much sort of CBDC focused. But again, the problem with the CBDC is the delivery cycle to get going takes a lot of time. So stablecoins have established themselves to be a success story for crypto. I think there's no doubt that they are, people keep saying it's the killer use case for crypto. And indeed, it has had a lot of adoption. It's used in a variety of wide use cases for good, inflation hedging in South America, transaction. It's the first gateway. But and it's the bridge product between traditional finance and the crypto universe, the crypto ecosystem. I found that legislation was being discussed and passed specifically about stablecoins in a number of major jurisdictions. So, of course, we all know about MiCA. We know the MAS in Singapore. There were discussions in the US at a state level, and also there was a proposed stablecoin bill, but without an industry body that represented the issuers themselves and showed that global expertise. So it was fragmented. It was led by individual companies without individual subject matter expertise or regional subject matter expertise. So my fear was entering this space. I saw this was very analogous to the FX world of sort of 10, 15 years ago when everything went to electronic trading, that it was fragmented. And there was a danger that poor legislation would be passed without scrutiny from an industry voice. So this was the gap that I saw, and others that helped me set up this union that we saw together. And this is the gap that we try to address. So what is our why? The stablecoin standard is simple. It says what it does on the tin. We're the industry body for stablecoin issuers globally. The innovation, and this is where I'm saying innovation and stability, we're in the innovation room, of course. The innovation needed was the stability in structures linking the issuers of the stablecoins with other providers and members of the supporting ecosystem so that the engagement with the nascent regulation could happen in an authoritative and a knowledgeable way. So our intention is that we share best practice, business development use cases, industry-led working groups, define what a high-quality liquid stablecoin should look like, engage with policymakers domestically and internationally. So this was the rationale. And from this solid foundation, we believe that we can sort of raise the bar for stablecoin issues and help them to get wider adoption in the financial ecosystem and beyond. So these are our core pillars. The progress, we're nascent, and we're bringing the nascent and fragmented industry together. Education, it's really important to share resources to educate the world, retail, institutional, regulators about the benefits of stablecoins, and I would say wider than that, the benefits of digital money in all of its forms and the innovations that it can bring. The use case execution. So by bringing together the stablecoin ecosystem from issuer to custodian to centralized exchange, to DeFi venue, to layer 1 provider, to layer 2 system, we can help to expedite specific use cases. One of the issues that a lot of people talk about in crypto and the cryptoverse is the lack of interoperability. It's very difficult if everyone's working in a silo, but if you are able to coordinate and communicate together as a group, then it's easier for us all to issue on the same blockchain, for example. And then it's easier then to coordinate and distribute a use case. It's easier to get liquidity providers to work on the same blockchain as well. So this is the kind of thing that being together, having a forum where you can communicate will allow us to expedite the development of the product set. Transparency, what we're looking to do, as you can see, it's a nascent industry body in a nascent asset class. So we were only founded in 2022, but so far we've done well. We've got 17 issuers, 17 different currencies represented, all regulated in a manner of different jurisdictions, from Brazil, from the US, like myself, NYDFS, all the way to Australia and MAS, covering a number of sort of different jurisdictions, and of course in the Eurozone as well. What we're looking to do with regards to transparency is to help in institutions in the banking world and traditional finance participants to be able to identify quality stablecoins. And we can do that in a number of different ways. One of the things that we have started to do is write consultation papers, have policy guidance, and we just released actually some core guiding principles that we believe all stablecoins should follow. So if you look at our LinkedIn page or our website, you'll see those are the latest building blocks. We had the version 1 of our standards. We now have a guiding principles document, and those guiding principles will help us to form the next set of standards that will help build the transparency that's needed for further adoption. And the last thing is influence. I think it's important that if you want to influence good legislation, you need to make sure that you're able to represent at the right level. And again, it's that ability to do that when you're stronger together means that you have a stronger bargaining hand at the table, and you're able to bring much more global expertise and experience and subject matter expertise to the discussion. I just wanted to go through a little bit of our history. This is our journey, essentially. So this started as a Telegram group. This is a very crypto-oriented origination story. Myself and a couple of other colleagues who were working at different stablecoin issuers at the time recognized that we were effectively having to create this for the benefit of the whole ecosystem. And so it started as a Telegram group. It grew. There was a wide net of issuers at all stages of their life cycle, from very established, regulated to startups. We started with monthly best practice calls. We created a first draft of the stablecoin standards so that issuers could sense check each other. The idea of the first set of standards was that can we trust each other in order to collaborate on use cases together? As that grew, we then formalized the body in 2023. This was the formalization of the industry body. The company was set up, IP protection. We started to have monthly all hands calls. We created working groups, so policy, interoperability, and so on. We created a Slack ecosystem with our members. We created a website, and we created an advisory board picked from subject matter experts who are not necessarily from the stablecoin issues themselves, but from the ecosystem. And that would help us to move in the right direction. This year, we've moved to monetize the body. As the DEA will also know, these institutions do not monetize themselves and need to get income in order to operate correctly, to give their members the best service. We're moving towards the standards, the second version of the standards. Consultation responses. We've just responded to the FCA and HM and Bank of England discussion paper on stablecoins. There is a Hong Kong paper that is due, and we look forward to contributing to other consultation responses as and when they come in on digital money and stablecoins in particular. We're looking to do an education campaign and thought leadership. We're having a main event, and we're looking to establish and prove the core use cases for stablecoins and implement a way for us to check the stability of the stablecoins that are members of our association. To give you an idea of where the advisory board has come from, they're generally higher-ranking individuals at some of the top companies that no doubt have been at the show in person today, or you have known about them. So Zodium Markets, layer ones like Stellar, Chainlink, which are a key part of the ecosystem, exchanges like Bitstamp and Kraken, the Solana Foundation. So it's good quality, high quality caliber personnel that are all in the same boat, where they are wanting to raise the bar for stablecoin issues and help at an early stage to make sure that the ecosystem is positioned for scale. In terms of our partners from the stablecoin side, the stablecoin issuers, we have a wide range of companies there covering a number of different currencies, from sterling, euro, yen, dollar, to the LATAM currencies, to StraightSex, which is an XSGD, a Singaporean dollar, Bilera, which is a Turkish lira. So we have a very, very wide remit and a global application of stablecoin issuers. Now, as we all know, the crypto ecosystem is heavily dominated by dollar, with 99% dollar. But anyone who comes from an FX background knows that in reality, that is not the case. The actual gravitation should be somewhere around 60% dollar, about 20% euro, and the other currencies would follow. So I really think that as the maturation of the industry grows and as stablecoins find adoption, this will directly lead to more adoption of non-dollar denominated stablecoins. So it's important that we're all communicating together to understand what is the best way for that to scale. An important part that we're trying to do is stitch together the industry. So, we are not an institution that lives in a silo, which is just stablecoins. It's really, really important that we are having partnerships and engagement with the global industry bodies that are also looking to raise the profile. So we're very, very happy to be reciprocal partners of the Digital Euro Association, and we look forward to continuing the dialogue and helping to exchange best practice with that. In the same way, we has a reciprocal partnership with the Digital Pound Foundation. So currency-specific associations, we are happy to help. And we accept that it's all forms of digital money for these associations, but where we can assist and bring subject matter expertise on the stablecoin side, we're happy to do so. On a national association side, we've started national association reciprocal partnerships, so Crypto UK, Blockchain Ireland, and so on. These are the things that we think that will help to raise the crypto ecosystem. And again, engagement and dialogue between us will raise the best practice. In terms of other associations, you may be familiar with the ERC 3643 Association, which is standard setting for tokenization and real-world assets. Now, that's very, very clear to be a massive growth use case, and there will be associations with stablecoins in quite a deep way to make sure that we're all tokenizing cash in the right way, and so we're established a dialogue with them. For those who have come from a TradFi background or an FX background, you'll be familiar with the ACI. The ACI is the Financial Markets Association for foreign exchange participants. Banks are in that group, investment banks are in that group, and participants are in that group from the FX community. So people think that, of course, stablecoins is digital FX. Then that expertise is something that's very, very important. I myself are a member of the ACI, and I'm on their global digital working their working group for digital assets, the Digital Assets Committee. So it's been very, very nice that we're able to work on this basis there. In summary, because I appreciate that it's 1:15 now, and I'm holding you from your drinks, I truly believe what is now being created is the stable institutional infrastructure of checks and balances that provides the next unlock of use case innovation. Through the stablecoin issuers, industry bodies like Stablecoin Standard and the Digital Euro Association, and the ecosystem partners that exist, there lies the nexus of the technological expertise with the financial services expertise and experience. And by being an independent, trusted advisor to the regulators globally, this should result in real best practice, credible policy engagement, and hopefully lasting sensible legislation. And I hope the ultimate outcome, financial innovation thrives in stability. So with that, I thank you very, very much for your time. If you have any questions, feel free to contact me. Otherwise, I wish you a very, very pleasant afternoon, and I hope to see you in person next year in Frankfurt.
Thank you, Rami. A round of applause. Next time, make my life easier and come here and just present this. I think we might try to take some questions, but I don't know how we can arrange this. But if there are any questions, someone wants to ask something, I can maybe forward it. Otherwise, maybe one from me. You mentioned the USD, the dollar dominance in the real world, and now in stable coins, we're looking at 95% dollar domination. Do you think that in the future, in the digital world, this might change in terms of the dollar winning even more percentages in terms of which stable coin dominates the market?
I don't think so. So at the moment, the use case and the reference point is a very crypto-centric ecosystem. If you look at like the stablecoin market caps at the moment, we know Tether is very much dominant. Then there is Circle. Then there is everything else. That's not a realistic market for global adoption. And as we sort of know, Tether is happy to live in the crypto universe, whereas I believe a lot of the other stablecoin issues are looking to have mass adoption in the global audience, therefore replicating the current currency setup that we have in trade, in commerce that we have, where the dollar is dominant, but it's certainly not as dominant as it is in the crypto representation. So I feel like it'll gravitate towards maybe 60%, which is where the realistic thing. Euro should be much more relevant and so on. But that's a function of a number of things. That's a function of good regulation. That's a function of good issuers. That's a function of safety of funds. That's a function of banking. There's a lot of things that you need to get through to unlock that sort of that use case to develop and that maturation. But I think it will head there. We had one of the thought leadership pieces that our members wrote together last year, and I encourage you to look at it, was a joint piece between Paul Kremski of Cumberland, Nick Philpott of Zodia Markets, and Alex McDougall of Stablecorp. And it was about non-dollar dominance and non-dollar stablecoin growth and the ecosystem in how it can grow to represent the real world more closely. So I encourage you to have a read of that.
Okay, great. Thank you, Rami. I think our time is up. So thank you for participating, even though digitally. Next time we'll see you in person. We can say goodbye, but talk to you later maybe. And
yes, look forward to it.
Live stream, because we need to give some information on another room, but that's it from us. So
no problem.
No worries.
Thank you for your time. Thank you, everyone.
Cheers. Thank you, Rami. Bye.
Bye.
And now for everyone who stays, we still have a few presentations in the main room and Audimax. There's a panel and the final words from the founder of the Digital Euro Association, Jonas Gross. This room will not have many more presentations, so we're closing down here. We're also closing down the live stream for everyone watching the live stream right now. And everybody should move to the main stage and the main rooms. So thank you very much. It was very nice and experience having you all in the innovation room. And it was by some time so packed there weren't even seats available. Thank you.